So guys, continuing with our leases discussion, Ind As 116, when we have taken on in the previous session, what we have covered is the definition of lease. In the definition of lease, you have seen four important terms. One is there must be a right to control the usage of the asset. Then there must be an identified asset, and this right to control the identified asset must be available for a defined period of time. And because you are having the right to control the identified asset for a period of time, to the owner of the asset you have to pay some consideration. Then individually each aspects we have seen. Right to control, when will you say that you have a right to control an identified asset? You have to satisfy two conditions here. What are the two conditions? The lessee or the customer should be entitled to substantially all the benefits from the usage of the asset. Then second condition is he should have the right to direct the usage of the asset. Then we discussed a benefit means primary benefits, secondary benefits, any subleasing benefits, all that will come under benefits. And we are only concerned about the benefits that are arising from the usage of the asset, not from the ownership of the asset that we have seen. Then regarding right to direct the usage of the asset means a decision making rights when, where, how, when the asset must be used. If they are predetermined, then the lessee or the customer is supposed to have right to control on the usage of the asset if that fellow has at least got the right to operate the asset, or he has involved himself in the designing of such asset. In that case only right to control the usage of the asset will be there. Next we have discussed what is identified asset. So an asset must be identified in the contract either explicitly or in an implied manner, but details about the asset directly or indirectly must be mentioned in the contract, sir. Asset need not be in existence. Then we have also seen substitution or substitution rights of supplier. When will you have substantive substitution rights? When there are two conditions satisfied. That fellow has the practical ability to substitute the asset and he is going to enjoy some economic benefit because of such substitution. If these 2 points are satisfied, the substitution rights of the supplier are substantive, and since they are substantive, you do not have an identified asset. If you are unable to conclude about these points, whether practical ability is there or not, whether economic benefit is there or not, in that case you presume that that substitution right is not substantive enough and therefore you have a identified asset on your hand. So that is one thing. Second, we have discussed, last point in this is the identified asset must be physically distinct from other assets. If there are 4 floors in a particular building and you are taking lease of a 4th floor, very clearly the 4th floor is distinct from floor 1, 2 and 3. There automatically point will be satisfied. Physically distinct problem comes when you are taking a portion of a property as lease or portion of an asset as lease. When you are taking only a portion of asset on lease, which portion exactly you are taking, that must be clearly identified in the contract. It must be physically separated from remaining portions of the asset which you are not taking under the lease. However, a physically distinct point does not apply when you have contracted to take all or substantially all of the asset or asset. Then in that case, even though it is not physically distinct, that is okay. A period of time was only our lease term concept, right? So lease term includes what, sir? The non-cancelable period plus what? Plus the periods covered by option to extend if it is reasonably certain that the lessee will exercise such option. Also add the periods covered by option to terminate if it is reasonably certain that lessee is not likely to exercise such option. And prima facie lease period is the period which is enforceable. If any party can cancel the contract anytime without any significant penalty, it means that you don't have a enforceable contract on hand. Therefore, there is no lease contract in the first place. Now then comes to consideration. This consideration only we have studied with the name of lease payments. Now in the definition of lease payments, there are 5 items which you have seen. One is fixed payments, the other one is variable payments, variable lease rents, the other one is you have option to buy, option price to buy the asset, then you have a termination penalty, and the last one is guaranteed residual value. And this fixed amount must be, fixed payments must be reduced with any incentives. When I say fixed payments, it also includes in substance fixed payments also. These are all how your consideration for the lease transaction is defined. You observe, sir, on every point, one or in every case there is one or the other point. On that, questions are also there, small questions albeit. Next, when we come to accounting in the books of lessee, this fellow has to write an entry called as ROU asset account debit to lease liability. Entry by default, lease liability should be accounted with an amount of present value of lease payments discounted at first priority IRIL, which is interest rate implicit in a lease transaction for the lessor. If that you cannot work out, then settle with incremental borrowing rate. This is for lease liability. Regarding ROU asset, the amount is present value of lease payments, whatever you worked out that, plus any initial expenses like initial legal cost and all that you add, then add any advance payments made to the lessor before the commencement date, minus any incentives you have received from the lessor before the commencement date. To that also add any provision for decommissioning liability. E number will be ROU asset. So ROU asset and lease liability ka starting number may be same, may not be same, but definitely whatever amount you are recognizing for liability, that will be the starting point for ROU asset. Extra plus and minus may be there. Hereafter what will happen is, hereafter on ROU asset, all you have to do is just provide depreciation and do nothing else. And this depreciation you should provide over the entire life of the asset. If eventually you are going to become the owner of the asset, if you are not going to become the owner of the asset, then depreciation must be provided only over the lease term, that much only. And regarding lease liability, you should go and apply ACM method. This is your basic accounting, sir. After this, we have discussed the case of reassessment of lease. What is the meaning of reassessment is, first of all, initially you have an option to extend the lease transaction, but you have felt that you will not extend, but after some 2 or 3 years you may reassess that extension option will be exercised, or there was a termination option which you thought that you will terminate, but after using the asset for some years you feel that we are not going to terminate, or you have included variable payments based on an index that is existing on commencement of lease, but later on clarity has come regarding the latest index. In that case also lease payments have to be updated. Whenever there is a change in your estimates, that is called as a reassessment. Whenever there is a reassessment, all you have to do is work out the present value of lease payments, present value of revised lease payments, and remeasure the lease liability correspondingly impact to ROU asset. That's all you have to, nothing will go to PRL. You simply update your lease liability based on your revised terms and corresponding effect, increase either increase, decrease either decrease. So your entry will be basically ROU asset to lease liability or lease liability account debit to ROU asset, as simple as that. Here the only one point where you should be careful is which discounting rate you should use. You should use the latest or revised discounting rate if this reassessment is relating to a change in the lease term or it is related to change in option relating to purchase of asset. In these two reassessments, revised discounting rate you use, otherwise continue with your original discounting rate. This is about reassessment. Then we last spoke about modification of lease. Modification of lease means whatever is not there in the original lease, you are now changing it. You are now adding something or you are decreasing something. Basically, it is a change in the scope of the lease. Either it can be increase or decrease. Now, how are you going to do accounting of modification? Before we go into that, first point, the moment there is a modification, remeasurement of lease liability, definitely you have to use a revised discounting rate. Original discounting rate has to be done away with. Now, modification law, there are two questions asked. Is there an increase in the scope of the asset? Plus the consideration for that is on market terms. If you say yes for this, this must be accounted as a separate lease contract. Even though actually this is a modification, this will be as good as you have taken some other asset with some other lessor. Like that, separately you will do accounting. If you say no, then I'll ask you, is this modification resulting into decrease in the scope or any other case? If it is any other case, all you have to do is simply remeasure the lease liability and adjust to ROU asset. You tell me, what do you remember if there is a decrease in scope? What do you have to do? You have to do 4 steps. What is first step? Proportionately reduce the carrying amount of your ROU asset, number 1. Next, also proportionately reduce the carrying amount of lease liability representing the scope reduction. E1 and 2 ki gap will be there. So gap between 1 and 2 transferred to PRL. Either gain or loss will come, throw it off to PRL. Finally, again remeasure the lease liability representing the present value of future lease payments. Either lease liability will increase or decrease, and correspondingly adjust to ROU asset. Done, sir. Up to here we have covered yesterday. Now, lessee point of view, one last point is there. With that, our lessee is done. We can move on to lessor. Normally, in every lease transaction, we have to normally record ROU asset account debit to lease liability while accounting and continue. But there are 2 cases where the lessee can claim exemption from them. Lessee can claim exemption from this ROU asset account debit to lease liability while accounting in 2 cases. What are the 2 cases? Number 1, if it is a short-term lease. Short-term lease ka meaning is the lease period is less than 12 months. Less than 12 months and does not contain an option to buy the asset. After 12 months, I have a right to buy the asset, then it is not called as a short-term lease. Because this is short-term lease, you want to claim exemption. If you claim exemption, what happens is, you will not recognize ROU asset, you will not recognize any lease liability. Whatever lease rents you pay, our lease rents are booked as expense in your PRL. So, what accounting will happen if you claim this exemption is, lease rents are recognized as expense directly in your PRL. This will happen. And no, sir, even if it is short-term lease also, I will capitalize ROU asset account debit to lease liability. Please do. Exemption means always optional only. Okay, exception is different, but this is exemption, pakka optional. If you want to still capitalize, do it. But understand, sir, what is the fun of capitalizing? Even if you capitalize ROU asset account debit to lease liability at the beginning of the year, since the lease period itself is less than 1 year, the entire amount of ROU asset will be depreciated to P&L account in the same year. Our lease liability also will be paid completely in the same year. So, effect will be same only. Only thing is, a little difference can come because your 12 months is spread across two different accounting years. Suppose I have taken a property on lease somewhere around September month. It will end at next year October, or sorry, next year September starting. So, this 1 year lease is spread across 2 accounting periods. So therefore in the balance sheet a small amount low difference can come, but this is an exemption. If you want to claim, you can claim here. The other one is lease of low value items. When you have taken a lease of an asset, asset prima facie is a low value item. The standard says you need not capitalize this as a ROU asset, recognized lease liability and all. Whatever rent you are paying, book it off as expense in your P&L account if you want. Now here the twist is, what is low value item? The standard does not define. But how much is low value? The standard does not define. But what it tells you is, asset ka value should be lower, means you are saying now whether asset is having a low value or high value. The assessment is not done on the inception, not done on commencement. The assessment has to be done when asset was new, not today. For example, your company has the habit of giving laptops to their employees for their office work instead of desktops. Software companies, so people move and work from home, all these are there, so they have to offer laptops. Do you think that whenever a new employee joins, okay, in entry level, the company will not buy a new laptop for him and give? What will they do? Existing laptop only they'll give it to the new employee. Okay, now these existing laptops they don't buy, they get it on lease. At once they negotiate for 500 laptops, 1000 laptops, like that, they bring it on lease. So today the laptop what is there in your hand is already 4 or 5 years old, but it is in proper working condition and all, but it is prima facie, its original price was 50,000. Today its worth can be 25,000 only, because it's already used for a period of 3-4 years. Now whether the asset is a low value item or not is something you have to assess, not as on today, on the date when the asset was new. When the asset was new, whether its value is low or not, the assessment has to be done on that date, not as on today. Of course, if I am giving a new laptop to you on lease, then commencement date value and the asset ka new value both will be same, because just only I purchased an asset and I have given it to you. So if you have a asset which is of low value item, when the asset was new, you can book off the entire lease rents paid on that asset directly into your P&L account instead of capitalizing that as ROU asset account debit to lease liability account. Here one condition what they put is low value item, no. So the entity should be capable of obtaining future economic benefits independently from this asset. So that only they told in 2 points. The asset should be capable of giving you future economic benefits, and it should not be highly interdependent on another asset. If these 2 points are satisfied, then the lessee can claim exemption from the big accounting of ROU asset account debit to lease liability. If you carefully observe, first case, short-term lease scheme, there is no restriction on value of the asset. It can be very high value item, but lease period should be less than 12 months. Second case scheme, there is no restriction on lease period. You could have taken this asset on lease for 5 years also. Every year you are paying lease rents, but still you don't recognize anything called as ROU asset or lease liability account, because prima facie the asset value is low. It is not that material enough to signify, to call it as an asset in the balance sheet. Therefore you book it as expense in your P&L account. It is like that. So chalo sir, with this lessee ka story is over. Presentation aspects are there, we will see towards the end, but as such lessee ka accounting is over. Now lessee is over, we will move on to lessor ka accounting. Lessor ka accounting is pretty simple. It's literally the same what you studied in your C-Enter. Anyway, sir, lessor ka accounting depends on whether the lease is classified as a finance lease or the lease is classified as an operating lease. So it makes it necessary that you understand what is a finance lease and what is an operating lease. Finance lease is defined as a lease that transfers substantially the risk and rewards of the asset to the lessee. If all the risk and rewards related to the asset are transferred to the lessee, then that lease is called as a finance lease. And if it is not a finance lease, automatically it will get classified as an operating lease. Now, If substantial risk and rewards relating to the asset are transferred to the lessee, we are calling it as what? Finance lease. Now, before we go and see when it will become finance lease, what accounting and all, just all of you apply mind, sir. I'll make one sentence. You tell me what is the meaning of this. I took finance from somebody. What does it mean? It's nothing but I have taken a loan, isn't it, sir? Finance lease ka meaning is, suppose you are the lessor. Asset life 5 years. You have given this asset on lease to me for 5 years completely. Okay. Now, whatever standard says is asset life 5 years. Lease period is also 5 years. So, who is enjoying maximum benefits from the usage of the asset? Lessor or lessee na? Lessee. If lessee is enjoying the maximum benefits out of the asset, then why did lessor buy the asset in the first place? Think. Why did he buy the asset in the first place? Asset life 5 years. You gave it to me on lease for 5 years. So, maximum benefits I am only enjoying. Why did you buy the asset in the first place? Your intention was never in the asset per se. Your intention is only on the finance income. So what you did is you invested your money, purchased an asset. That asset you have given to me on lease. And through my lease payments what I make to you, you are recovering your original cost of the asset plus the interest income what you expect for the next 5 years. That means this is basically a financing transaction. Instead of doing this drama, what we could have alternatively done is, you directly give me money. E money I go and buy a asset. On the loan what I have taken from you, I will keep on paying you installments. Instead of something being done directly as a loan transaction, they covered that in the name of a lease transaction. Standard says, don't worry, I will catch you. This is a finance lease. So lessor books law, sir, asset cannot appear. Why asset cannot appear in a finance lease? His interest is never in the asset. His interest is only to earn finance income, interest income. So, but he has to first buy the asset, no? So, in his balance sheet, asset will come. But the moment he enters into a finance lease transaction, asset must be eliminated. A place of what should be there? Loan receivable should be there because he gave loan to me. A loan receivable is standardly we call it as a lease receivables. When you gave loan to me, what is the entry you should be writing? Loan receivable account debit to bank. Same thing here is standardly we call it as a lease receivables. But nevertheless, the substance you have to understand. This is one classic application of substance over form accounting, the entire finance lease. And next, when will you classify a lease as a finance lease? Now, this is the same 5 criteria what you might have studied in your C-Enter. What are the 5 criteria? The lease period covers for major portion of the economic life of the asset. Life of the asset 10 years, lease period is 8 years. That means maximum benefits from the usage of the asset are enjoyed by the lessee himself, and therefore the lease is classified as a finance lease. Number 1. Second one is easy one. There is one more easy one. What is that easy one? After payment of all the lease payments, the lessee automatically becomes the owner of the asset. When anyway you are going to become the owner of the asset, so today only you recognize the asset in your books is what this is, and that fellow should de-recognize the asset from his books. So that is one. Third one is the lease contains a bargain purchase option. The lease contains a bargain purchase option. Bargain purchase option means the lease transaction gives the lessee an option to buy the asset at a particular price which is expected to be lower than the fair value of the asset on the date when he is likely to exercise the option. Suppose after 5 years, asset ka market value is estimated to be 10 lakhs. But lessor gave an option to the lessee to buy the asset only for 3 lakhs. Tell me, sir, is lessee likely to exercise or not? Whether he needs the asset or not, definitely he will exercise it. That means, lessor today he is giving the asset to the lessee, asset is not going to come back. Next 3 years or 5 years he will use. After that, he will exercise the option. He will become the legal owner of the asset. So, the lessor should not retain this asset in the balance sheet right now only. He should give it away. Third case. Fourth case now, it says that the present value of lease payments substantially are equal to the fair value of the asset. For example, think over carefully, sir. It is little mathematical but very logical. Suppose, sir, you are lessor, okay. Today, you bought the asset for an amount of 5 lakh rupees. 1, 2, 3, 4, 5. 5 years lease period you have leased the asset to somebody. That somebody in which you are charging some lease rents. What our standard asks is, Babu, ee lease rents ka present value work out and see how much is the present value. Suppose some number I got, let us say I got an amount of 4,80,000. He says, is the present value of the lease payments, if it is substantially equal to the fair value of the asset as on today, this lease is categorized as a finance lease. You tell me the logic for this. What's the logic for this? Then why is it a finance lease is the question. The logic for this goes like this. It means that, sir, asset, the lessor point of view, I gave you this. Imagine for one moment, this is lessee. Lessee also knows that today he can buy the asset at what value? 5 lakhs. Like how lessor bought and gave me the asset, like that lessee also can buy the asset at 5 lakhs. But why is he not buying? He does not have money, simple. So what he did, he took the asset on lease. Lessor also does not have the asset. So what did lessor do? He bought the asset. He gave the asset to me on lease for a period of 5 years. After 5 years, asset will go back to the lessor. But in these 5 years, lessor is recovering rents from me in such a way that the present value of the lease rents is almost equal to the fair value of the asset. E point only lessor knows, lessee also knows, lessee also knows. Knowingly only I entered into this transaction. That means my payments is almost equal to the cost of new asset today. If I am paying this means it is implied that I wouldn't pay this much of lease rent if I don't believe that whatever benefits I would have received had I purchased the asset, the same benefits I will receive in the capacity of a lessee. Are you understand, sir? If I am the lessee, if I am paying a consideration whose present value is 4,80,000, which is almost equal to the fair value of the asset, I am not stupid to do like that unless I believe that whatever benefits I could have enjoyed becoming the legal owner of the asset, the same benefits I am enjoying even in the capacity of a lessee. Since you are enjoying benefits like owner, the lessor should not have this asset in his balance sheet. Therefore, this is a finance lease. The intention point of view adjustment. The last one, if you remember, the asset is of specialized nature asset, which is exclusively made by the lessor for the lessee and cannot be used by anybody else unless major modifications are made for it. In this case, sir, suppose, look at this. X Limited is a lessor. Y Limited is a lessee. Y Limited gave detailed specifications based on which X Limited made an asset. This is a highly customized nature asset. The asset life is 20 years. X Limited leased the asset to Y Limited only for a period of 12 years. If you observe, the asset is given on lease to Y Limited only for a period of 12 years. That is not the major portion. Major means here not democracy or simple majority, more than 50%. The major portion of the asset means it should be conclusive enough. Technically speaking, it's just above 50 or 55, 60%, but that's not conclusive enough. At the end of 12 years, Y Limited will not automatically become the owner of the asset. There is no option to buy. Present value of lease payments, a point I do not know. But what I know is this is a customized nature asset. Now you tell me, sir, after 12 years, when the asset comes back to X Limited, what will X Limited do with this asset? Because this is a highly customized asset. There is every chance that the asset will become useless for X Limited, isn't it? Because this is heavily customized, and if I have to make it available to some other lessee, I have to incur a huge cost. Today, I already incurred a huge cost in making this asset now. So what X Limited will plan is, whatever cost I have incurred in making this asset, the entire cost I will recover from Y Limited only over a period of 12 years. Okay, if that happens, automatically fourth point gets satisfied. What is fourth point? Present value of lease payments will be substantially equal to the cost of the asset, because you are the only fellow who get benefits out of this asset. I created this asset for you only. So whatever cost I incurred, I have to recover it from you only, even though the lease period may not be a major period. Entire cost I will recover from you only. Or that fellow asked lease for 12 years. I said no, I won't give for 12 years because after 12 years if the asset comes back, what should I do? So we negotiated that the lease period should be 18 years. That fellow accepted, I also accepted. The moment you do this negotiation, you will satisfy first point. What is first point? Major period of asset life is lease period here. So if fifth point when you satisfy, that will eventually link you to either first point or fourth point, and sometimes even the third point also. That is, after 12 years you have an option to buy. So the customer is just said, no sir, lessor this asset is eventually becoming useless. So he'll somehow try to extract all the money invested on this from the lessee during the lease period. Therefore it is a finance lease. Now these are all the primary indicators. Means in your Inter when you studied this, if 5 conditions only are there or 5 criteria only are there. But in this standard 116, apart from these primary indicators, there are 3 other points which are called as secondary indicators. How you must understand them is, if any of these 5 criteria is not helping you to reach a conclusion, then read the secondary criteria and understand whether this is a finance lease or an operating lease. So always secondary indicator means what? You should give less preference for that. Now what are the secondary indicators? Very, very easy. First one, loss on cancellation. Suppose any time the lease contract is cancelled, and because of this cancellation, the lessor, if he suffers any loss, because a used asset will come back to me, no sir, lessor point of view. So whatever losses lessor is going to suffer, our losses are to be recovered from the lessee. Whatever loss the lessor suffers because of cancellation, that loss who has to pay? Lessee has to pay up. That means indirectly what will happen, sir? Imagine the asset life is 10 years. I gave it to you on lease for 8 years. What I tell you is, anytime you cancel after 4 years, you have to pay me a penalty. And that penalty is almost equal to 3 years ka lease rent. Tell me, sir. If you continue also, you have to pay. If you don't continue also, you have to pay a termination penalty which is almost equal to the lease rent. What is the chance of you terminating the lease? Less. Or even if you terminate also, my next 3 years ka lease rent I am recovering from you, no? So it is as good as a finance lease. This is supporting for a finance lease views. Next one. Risk in fair value of the asset. Suppose he says that here lease period is over, 1, 2, 3. By the end of 3rd year, when the asset comes back to the lessor in a used condition, residual value of the asset we will work out. Let's say residual value of the asset is 10,000 rupees. But on first day, this fellow promised that I will give you a guarantee that residual value will be at least equal to 50,000. But what is the actual residual value? 10,000. Who has to pay money to who? Lessee has to pay money to the lessor. That means, is lessee taking the risk? Yes. What risk is he taking? If the asset is used more, it is used to such a level that its worth has fallen down, then a risk I am taking, I will pay the remaining money also. That means the risk belongs to the lessee. So indirectly what he is trying to say, risk in the asset does not belong to lessor. If risk in the asset does not belong to the lessor, you cannot show the asset in your books today itself. Risk and rewards are already transferred. Now, is it possible that, think like this, there is a lessor who asked a lessee that, lessee, use the asset carefully. I want you to ensure that, or promise me that, the asset ka value at the end of 3rd year when the asset comes back to me should be equal to 50,000. Then the lessee asked, what if it is below 50,000? What is there? A below 50,000 gap, whatever is there, that lessee has to pay money to the lessor. Lessee says, fair enough. What if the asset value is more than 50,000? Will you pay me? I make a promise that asset will have a worth of 50,000. I'll give back the asset to you in a fantastic condition at the end of 3rd year. Asset value is 80,000. Will you pay me that 30,000? Is it a fair ask or not? Yes. You haven't come across such questions anywhere, but these kind of agreements are possible. You are asking me to protect your asset. You are indirectly asking me to not use the asset so much that its value will deplete below 50,000. I will protect the value of the asset. Even if I use also, I will incur some expenditure, ensure that your asset is standing at a value of 50,000. But if the asset value is more, I may also ask the lessor to pay me extra money. In that case, the lessee is also exposed to rewards from the asset also. Risk also, rewards also. That also is an indicator that this is a finance lease. Last one. Look at this. Easy example. Asset life 10 years, ma'am. Lease period is only 5 years. It is non-cancelable. Can you conclude that the lease period is covering the major portion of the life of the asset? You can't conclude. Even if I tell 6 years also, you can't conclude. 6 years is just crossing 50%. We want something around more than 75%. More than 75, the standard does not say, but that is generally understood. Standard law, nowhere 75% and the criteria is that is copied from USA GAAP. Anyway, leave it. But this lease contains an option to extend the life of the lease by another 3 years. Option to extend the life by another 3 years. If that 3 years also I consider, then the lease period will become 8 years. This is definitely major portion of the life of the asset. Now I do not know whether that fellow will exercise this extension option or not. And what the standard asks is, ఈ extended period లో whatever lease rents you are charging, are they significantly showing an incentive to the lessee so that he will exercise the option? That means, let us say during this period I charged a lease rent of 5 lakh rupees per annum. But during this extended period, should he choose to extend, the lease rent is only 3 lakhs per annum. That means the lease rent in the secondary period of lease is significantly lower than the lease rent in the primary period of lease, which itself creates an incentive to the lessee that he will extend the lease. And once he extends the lease period becomes 8 years out of the total 10 years, and therefore this becomes a finance. Even secondary indicators. Primary law, if you are unable to conclude, come to secondary. You'll be able to make a better judgment. So, these secondary indicators wala thing was not there in your AS 19 or the old Ind As 17. It is there only in Ind As 116. Building later on we will see. Now sir, there are two accountings you have to learn. One is accounting for operating lease, accounting for finance lease. What we explained till now is what is a finance lease we discussed. If none of the points are satisfied, you concluded that the lease is an operating lease. In that case, what accounting will you do? First we'll learn this because this is easy. Very, very easy point. As one question also is not there on this. Lease rents are to be accounted as income in your P&L account on straight line basis. You have to apply SLM or any other pattern which reflects the loss in value of the asset. And then, yesterday also I told you, asset continues in the books of lessor. Because when you say that the risk and rewards are not substantially transferred to the lessee, it means indirectly that risk and rewards are there with lessor only. When asset ka risk and rewards are there with lessor only, automatically he will not de-recognize the asset. Asset continues in my books. Somebody is using it. For that usage he is paying me some user charge. That I will account it as income in my P&L account straight. Now, on what basis will you include? The standard says is the first priority. Unless you work out some other pattern which reflects the loss in the value of the asset. Now, look at one example here. When somebody tells you straight line basis, it sounds easy, but it's not always easy. You think that is easy because every year lease rent is same. What if every year lease rent is not same? Every year lease rent is not same. Straight line booking means what? Every year same expense should come, no? Sorry, same lease rent income should come, no? But what if lease rents every year are not same? Then what will you do? Or what you are paying is something, sorry, what you are receiving is something as a lessor, but the income what has to come to your P&L account is based on some other ratio. How will a mismatch will be there? How will you handle that? It's a good case study. The old ASLI question was there. Now they have not kept that in your study material, but it's a good one. How you have to think is like this. X Limited leased a machinery to Y Limited classified as operating lease for 3 years. Lease rents are tell me some numbers randomly. 20,000, 35,000. 20 plus 35 is how much? 55. Not good, not good. 30. This is also not good. 34. Now tell me, sir. 75,000 minus 54,000. 19, huh? What is the total? I should write 21,000. I'm sorry. Then 21,000. Total is how much now? Now I want a round number. That's all. Now, in contract terms, according to Ind As 116, lease rent income on SLM basis should be equal to 75,000 divided by 3, which means every year I should record an income of 25,000. Carefully observe, what you are receiving is different. What should come to your P&L account as income is different. Now, how are you going to account this is important. First year, second year, third year. First year, bank account debit. I am leaving one line. 2, lease rent income. This much I know. What I know for sure is a credit every year should be equal to 25,000. Ind As 116 bothers only about this. A gap, how you will account, that is your headache. There is no big headache here. How much are you receiving in the first year? 20. But your income is how much? 25. It is like I book a sales of 25, but debtor paid me only 20. Another 5,000 is receivable. 5,000. This we call it as a deferred rent. We call it as lease suspense. We call it as a lease equalization account. Whatever name you want to give. It's a temporary account that will die eventually. I am calling it as lease suspense. Although lease equalization is a better word. Lease suspense I am calling it as. Fine. First year I can say. Come to second year. Second year that fellow paid me how much? 34 he paid me. This time how much is the gap? 9,000. This side we got a gap. What should I do? Again, this also credit to lease suspense account only. If you credit to lease suspense account, what happens is first year 5,000 debit now gets cancelled. Now it has a credit of 4,000. What it means is year 1, year 2 put together, you are recognizing an income of only 50,000. But the amount what you received is 54,000. You extra received an amount of 4,000 as a liability. So liability is going and sitting under the name of lease suspense account. First year low, you had to receive 25, but that fellow paid you only 20. This was an asset. Now there is a 4,000 rupees liability because you extra received. Third year, automatically it will die. How much are you receiving third year? 21,000. Receive that. But your income is 5,000. There is a gap of 4,000. With that, your lease suspense account dies. Instead, you don't like lease suspense, call it as deferred rent. You don't like that, call it as lease equalization account. Some name, who cares? Ultimately, that is going to die. A balance in that lease suspense account either represents an receivable or it represents a payable indirectly. That's an asset or liability. As simple as that. Now, what our standard says is, in your P&L account, each year you will record a lease rent of 25,000, 25,000 and 25,000. That means irrespective of how much you receive each year, a lease rent should be recorded as income in your P&L account on a straight line basis. But there is one more alternative given. What is that alternative? If you do not want straight line method, recognize this as income in your P&L account in any other pattern which reflects the loss in the value of the asset due to usage. Sir, sir, tell me, why am I receiving this money first of all? Somebody is using my asset, for that he is paying me. So it is an income for me, sure. But what am I losing? Value of the asset. Somebody is using of my asset. No, if somebody is using of my asset, definitely I am losing the value of the asset. As a compensation only I am getting this. Now what you do is make an estimate regarding the pattern of decrease in the value of the asset. Every year your asset value will come down by what amount? Make an estimate if you are able to make. Suppose you told that 3:2:1 ratio, my asset value will come down in the next 3 years. And since asset value is coming down in the ratio of 3:2:1, is 75,000 also credit to your P&L account in the ratio of 3:2:1. So that matching concept will happen. Or much more easy way, although standard does not directly suggest it, what is that is, sir, even though I am recording lease income in my P&L account, asset is there in my balance sheet only. On that asset every year I will provide a depreciation. Depreciation also will come into my P&L account. A depreciation ratio will hit it. If you are following straight line method, then equal will come. You need not follow straight line method. No, there are so many methods of depreciation. If you follow some other method, our ratio will release 75,000 to your P&L account, so that there will be a matching between depreciation and the compensation for depreciation. So that is alternative. But first priority is to be given for straight line method. That's it, sir. Next, in the course of operating lease, suppose X Limited is a lessor, enters into a operating lease with lessee Y Limited. ఈ ప్రాసెస్లో సార్ X Limited paid 5,000 rupees initial direct costs, and the legal charges and all X Limited paid. You guess and tell me what could be the treatment of this. Very easy guess. I paid 5,000 rupees today, first day, for entering into an operating lease transaction. Ee 5,000, when should I release to P&L account? Now or over a period of time? Sir, because of this operating lease, how am I getting benefited as a lessor? You will receive lease rents each year. So you will book income every year. Since income is booked every year, the cost also should be booked to P&L account each year. So the guidance given for this is, defer and amortize. Sir, entire Ind As lo, sir, defer and amortize wala cases are very, very few, because deferred revenue expenditure concept అనేది ఒక outdated concept. You know where it is there else other than this? Ind As 115, if you remember, contract costs and something we studied. Contract cost means cost incurred to obtain a contract and cost incurred for fulfillment of contract. Suppose, sir, somebody got a customer to you. A customer is a construction company, is a customer for which I have to do construction work, and construction lasts for a period of 4 years. PO satisfied over a period of time. Revenue also is booked over a period of time. To that fellow, to that broker who got me the customer, I paid 10 lakh rupees commission. The 10 lakhs commission expense, don't say that, sir, commission expense is expense in P&L account at once. No, not at once. This is a cost incurred to obtain a contract, directly incurred incremental cost. So since revenue is getting booked over a period of time, the 10 lakh rupees commission also is booked over a period of time. Defer and amortize 115. This 116 ka defer and amortize. This expense and normal registration charges, legal fees, this kind of stuff. Normally we all understand that illegal fees and all will go to P&L. Not in this case, because the benefit is not coming in the current year. The benefit will come over a period of 3 years. Therefore, this also must be deferred and amortized. If expenses, they are not assets. Expenses ke deferred revenue expenditure concept is almost outdated, but India is a few very small cases are there. This is one of them. Okay, sir, with that our operating lease story is over. Now let us come to the most important one, finance lease. If you already know, it's fine. If you do not know, it is much more better. Sir, finance lease ka accounting, if you have to understand, first some definitions you must know. So let me take some number. Sir, this fellow is a lessor. In order to give the asset on lease to you, first of all this fellow should have the asset. Therefore, this boy spent some 8 lakh rupees today to buy the asset, which you can understand it as the fair value of the asset, because he bought the asset today. And he gave the asset on lease to a lessee for a period of 3 years. Every year lease rent is 3 lakhs, 3 lakhs, 3 lakhs. After 3 years, the asset will come back to the lessor. When the asset comes back to the lessor, the asset can have some residual value. Let us say such residual value is identified as 4 lakhs. Means you believe, standing on first day, that my residual value of the asset will be 4 lakhs when it comes. I went to the lessee and asked, lessee, promise me that the asset will have a value of 4 lakhs at the end of 3 years. Lessee told, I can't give you that promise. I will promise that the asset will have a value of 2.5 lakhs. If you don't say okay, I will find some other lessor. I agreed. So if even though I estimate that the asset ka residual value is 4 lakhs, the promise made by lessee or any party on behalf of lessee, which is called now as guaranteed residual value, that is only 2.5 lakhs. I extra 1.5 lakhs, nobody gave me guarantee, but I still believe that that is also going to be earned. This is called as unguaranteed residual value, UGRV. So the lease payment means your lease rent, this is also lease rent. These are all lease rents. Apart from these 3 lease rents, there is a residual value. Residual value, some portion is guaranteed, some portion is unguaranteed. Till the clarity is here. Now tell me, sir, since we already covered the definition of lease payment yesterday, which all numbers are lease payments in this so many big calculation? Is the lease payment ega? This one also? This one also? 4 lakhs also? No, only 2.5 lakhs. Lease payments, UGRV is not there, only GR. Suppose you believe that the asset is going to be bought by the lessee at the end of year 3, then obviously the concept of residual value will not be there. A place low option money will be there, because lessee has to pay some money in order to become the owner of the asset. Are you understanding what I am trying to say? GRV is not a case which you will have in all the cases. If lessee has an option to buy the asset and he is likely to buy the asset, then instead of writing residual value there, I will record it as option price what the lessee is going to pay me. In that GRV, UGRV will not be there in that case. Now, you have to learn 3 definitions, sir. Very, very important. First one is GIL. GIL is gross investment in lease. So GIL is nothing but every number you are seeing there, add everything, every number. 3, that is formula wise way writing. This is present value of, sorry, not present value, I'm sorry. Total lease payments plus UGRV. Total lease payments who are all covered? 3 plus 3 plus 3 plus 2.5. Up to here, total lease payments. UGRV is 1.5. Literally put every inflow from the asset must be considered. Ade GIL outundi, sir. Total cheppu 11.5 and 13 lakhs. I have a simple question, sir. You invested how much for buying the asset today? 8 lakhs. But how much is the total cash inflow you are recovering from the asset? 13 lakhs. And extra 5 lakhs. Is it interest income or not indirectly? Yes. So, 13 lakh rupees definitely includes interest or finance income. Definitely includes interest or finance income. There is no doubt on that. GIL అయిపోయింది, sir. Next definition. interest rate implicit in lease. ఇది yesterday lessee books లో this was given as the first priority discounting rate. If it is not there, then only you should go to IBR, incremental borrowing rate. So interest rate implicit in lease means what? Nothing but normal IRR, sir. Normal IRR. Imagine this is a capital budgeting sum. Imagine it as a capital budgeting sum. This fellow invested this much in asset. Initial cash outflow. Thereafter future low cash inflows. How much is the IRR he is earning? And what will you do? IRR is that discounting rate which equates the present value of future cash inflows to present value of cash outflow today. Isn't it, sir? That only this fellow formally tells like IRIL is that discounting rate which equates the present value of lease payments plus present value of UGRV to the fair value of the asset. That's nothing but PV of cash inflows is equal to PV of cash outflows. Our discounting rate IRIL. Instead of telling that directly to you, this fellow uses the technical language of Ind As 116. That's all is IRIL. So IRIL is nothing but discounting rate at which PV of LP plus PV of UGRP will be equal to fair value of the asset. This is nothing but IRR for the lessor. Lessor what return he is earning in percentage terms, that is your IRIL. So first one GIL we studied, then we are studying IRIL too. Third definition, right sir, this is nil. Net investment in lease. Very easy. Nil is PV of GIL. You already know GIL, no? GIL ka present value will become net investment in lease. Now what is GIL? GIL is lease payments plus UGRV. So present value of GIL should be equal to present value of lease payments plus present value of UGRV. This is exactly the formula for nil. Sir, present value ki which discounting rate I should use? For present value or for discounting, use Liril soap only. Use IR. Observe closely. I have a question now. This is slightly confusing but important. Sorry, lease payments UGRV. If you discount it using IRIL, what will you get? That is called as what? Net investment in lease. But how did you compute IRIL in the first place? How did you compute? What you did is you discounted the same lease payments only. Same lease payments only plus UGRV in such a way that you equated it to the fair value of the asset. This discounting rate only is IRIL. Correct, no sir? Suppose you got a rate of 12%. So at 12%, if I discount all my future cash inflows, it will become equal to my fair value of the asset today. Come here separately. Net investment in lease, what he is saying is, if PV of LPs plus PV of UGRV work out, whatever number you get, adhe net investment in lease. But for discounting, you have to use which rate? IRIL. Don't you understand that if I use IRIL and discount all these lease payments, GRV, UGRV, the result will be what? It will be fair value of the asset. So can I presume that fair value of the asset and net investment in lease both are same? Yes, definitely they will be same. Definitely they will be same. If they are not same, your IRIL is wrong. Net investment in lease anna, fair value anna, both are same sir. Sir, away ingredients are their discounting rate. Why will you get a different number? If you are getting a different number, your IRIL is wrong or your fair value is wrong. Something should be wrong. Sir, our lease payments is 12% the discount. This is matching with fair value. Therefore, you told that 12% is IRIL. Now, other lease payments, again, if you discount with 12%, you are calling that as net investment in lease, but this and that both are same. From this conclusion comes that while doing questions, confusion will come, sir, if you don't observe them properly. Net investment in lease will be always equal to fair value of the asset. Only one exception is there, except when there are initial direct costs. If there are initial direct costs, what you will do is, initial direct cost, you will go and add it to the net investment in lease. Because of that, what will happen is, net investment in lease will be slightly higher than your fair value of the asset. Case lo the rest all cases they both will be same, sir. NIL and fair value of the asset both are same. So tell me this. Here or indirectly, I am telling you the treatment of initial direct cost incurred also. So tell me, ACM method, I gave loan to somebody. At the time of giving loan of 10 lakh rupees, I incurred 5,000 rupees expenses also. What is the treatment of this 5,000 expenses? Loan given, which method will be applicable? ACM. At that time I incurred transaction cost of 5,000. What should I do with 5,000? If 5,000 also have to go and add it to the loan given, isn't it, sir? Same story here also. I gave the asset on lease to you, so it's as good as I have given a loan to you. I'll recognize net investment in lease. To that, initial direct cost also I will add up. There is a difference between fair value versus fair value adjusted with transaction cost. This fair value adjusted with transaction cost. Case they both will not be same, otherwise they both will be same. That's what I am indirectly trying to say. Okay, last point. Tell me this, sir. In nil and a number, whatever you computed, no? It includes interest income, excludes interest income. Nil. Jill, you told that it is including interest income, but nil definitely does not include interest income. Why? The moment you discount whatever interest income is there in that lease payments, that automatically gets cancelled off. Okay, so nil does not include interest income. Fourth point, you might have seen this question a lot of times in your C-Inter. Unearned finance income. Finance income and sir, interest income. Formula is Jill minus nil. Jill is inclusive of interest, nil is exclusive of interest. When you deduct Jill minus nil, you will get the total interest income. But interest income is something which you will account it not on the first day, you will account it over a period of time. So on day one, entire interest income is unearned. Therefore, we call it as unearned finance income. It's a very, very popular question. That's it, sir. Definitions are over. Now let us come to the accounting part, which is very, very extremely simple. Operating lease accounting is very easy. In finance lease accounting. All you have to do is, first one, de-recognize the asset and recognize lease receivables. So what is the entry I should write? Because lease receivables account debit. 2, whatever asset you have, asset you de-recognize. Asset, if it has to die, I have to de-recognize that at carrying amount of the asset in my books, isn't it? Otherwise the asset will not die. But lease receivables must be recognized at net investment in lease. Most of the cases lo gap will not come, both will be same only. But in case gap arises, any difference is transferred to PRL. Generally gap will not come. Why gap will not come? I'm telling you, carefully listen. First day I purchased an asset. Entry will be asset account debit to bank with an amount of 8 lakhs. 8 lakhs, you must understand that this is your fair value. Okay, next. This is the first entry. Then I have to write the above entry. Above entry is what? Lease receivables account debit to asset. Asset in my books is appearing at what value after the first entry? 8. I have to cancel it 8 only. Understand, the carrying amount which is also equal to the fair value. And lease receivables are recognized at what value? Net investment in lease. What did we just now establish? Net investment in lease will be exactly equal to fair value. So in nil is also equal to fair value. This also will be equal to 8 lakhs. So I enter a gap Raju sir. It will not come. So then anyway it is not coming. Why did you write any gap transfer to PRL, and why did you write? Why I wrote is, sir, gap will not come when you buy the asset today and give it on lease. Imagine the asset you did not buy it today. The asset is something which you already have with you since so many years. In that case, when I have to kill the asset, I have to kill the asset not at its fair value, I have to kill the asset at its existing book value. So I'll again remove it carrying amount, but our case lo carrying amount to fair value will not be same. Appudu gap vastundi sir. But a new asset when I buy and I give it to you on lease, pakka gap will not come. Existing asset I give it to you on lease basis, then gap will come. So gap may come, may not come. You apply individual rules. Asset should go at carrying amount because asset has to die from my books. Lease receivable should be recognized at net investment in lease. Gap was the P&L gain, sir. Gap does not come. It's okay. Come to the next one. Awesome, sir. For initial direct costs, if you incur any expenses, what happens is, as usual, you'll go and write to bank because money you have paid. This is just like you incurring transaction cost in the course of loan given. Loan given, low transaction cost to incur, ACA method, that also is adjusted into initial recognition amount only. Apply that as it is. So the entry will be lease receivables account debit to bank. In fact, you could have clubbed this with the above entry also, because but every case la expenses will not be there. Wait to unnecessarily make you remember something. Separately wrote. In brown color lo whatever two entries we wrote, no, club those two entries and tell me net entry. Asset to bank, lease receivable to asset. What is the effective entry? Lease receivable to bank. What does it mean? The entry when will you rate normally? When you give loan to somebody, what is the entry you rate? Loan to bank. Our entry will come, sir, effectively. Do you understand what I'm trying to say? You club these two entries, it will give you a feeling of you have given a loan to somebody. A loan giving time low, you incurred some transaction cost. Adjust it to the same loan account. I understand. There is nothing great, sir. Finance is the most easiest one. The ACM method. You just have to realize that it is ACM. Because everybody starts with this. But backgroundly entry you already wrote. That is not a lease transaction. No, asset to lease, asset to bank. That's why nobody talks about that. But this is also there in the background. It becomes a loan transaction. Sir, hereafter what will happen? What will happen? For lease receivables, you will do accounting which is similar to SCM. That's all. Life goes on like that. Asset already died. That much only, sir. Now on this one question is there. Only one question is that direct plain financial lease accounting. We'll quickly finish off that and then we will touch next concept. Come to question number 46, please. I'm sorry, not 46. I don't know whether I brought that question or ideally I should bring it. 49 you pick up. Read 49th one. I told you, Jan 21 was one of the difficult paper. Our paper they asked this question. Just one exam before only leases was started applicable for the exam. Just one exam before. There are 45 questions at the time. All 45 questions or 42 questions are on lessee only. 3-4 questions on lessor. In that also, only one big question is there. Sorry, 2 big questions are there. Rest all small chotu questions. Nobody expected that lessor accounting will come. That fellow asked CA enter a question in CA final. Difficult ante not difficult. Are you prepared for it? You are not prepared. So that kind of shocks you will get sometimes. But anyway, that's why concept completely failure and you are never at risk. Read. Coops Limited availed a machine on lease from Ferrari Limited. The terms and conditions of the lease are as under. Lease period is 3 years. Machine cost 8 lakhs. Machine's life is 5 years. So life 5 years slow, lease period 3 years, 60% not very conclusive. Continue further. The machine reverts back to Ferrari on termination of lease, which means once 3 years is over, you don't have an option to buy. You automatically will not become the owner. So things are looking bad for you. The UGRV is estimated at 50,000 rupees at the end of the year, third year. 3 equal annual installments are to be made at the end of each year. IRIL is given as 10%. PV factor of third year given, annuity factor for 3 years is given. You are required to ascertain whether it is a finance lease or operating lease, first question. And also calculate unearned finance income with relevant context to relevant Ind As, whatever. Sir, such a stupid. On one side, he is asking unearned finance income means which lease automatically. The answer is finance lease. Operating lease, why will I have finance income? But you have to show and prove that it is a finance lease. What is missing in this question? There is something that is missing in the question. Lease payments are not given. Lease payments are not given. Lease payments also you only have to calculate. So it's already solved. If you do not want to write it is okay. Lease payments are not given. What we know is at IRIL, fair value of the asset is equal to PV of lease payments plus PV of UGRV. Fair value of the asset, that fellow gave it to you as 8 lakhs. Lease payments I do not know. Okay, I am assuming it as LP, or if you want, I will assume it as X into PV IFA. What is the IRIL given? 10% for 3 years period plus what is the UGRV value? 50,000. No? 50,000 into PV IF is not an annuity cash flow third year. So 8 lakhs plus is equal to X into 2.48685, but he gave you how much? 2.4868 only he gave. That's okay. Plus 50,000 into 0.7513. 1 ichada, 1.7513 ichada, 1.3 ichada. So sort out X ma. Entama? 306 593. Yeah, okay. That's all. 3,06,593 is your lease rent per annum. Without this formula also you can work out equated installment model. That also will give you. Anyway, we're not interested. This is fine. This is good. Then we have to determine whether it is finance lease or operating lease. Apply one by one all finance lease ka criteria, sir. What is the first one? The lease period should constitute major period of the life of the asset. Out of 5 years life, lease period is only 3 years. It is just more than 50%, but it is not conclusive enough. So we'll simply say that it is not conclusive. E point waste. Second point, lessee does not become owner automatically on the payment of last installment. ఆ కేసు కాదు. Third one, there is no option to buy the asset at a cheaper price and it is reasonable. A drama is not applicable. Nowhere in the question it is mentioned that it is not a specialized nature asset. Out of your 5 criteria, 4 we have seen, we can't conclude that this is a finance lease. Then you have one more. You have to check whether present value of lease payments is it substantially equal to the fair value of the asset. How will you check? Work out. A, fair value of the asset, which is already given in the question, which is 8 lakhs. Lease payments ka present value. PV of lease payments is equal to, you told me some number, no? 306,593 into PVIFA 10%, 3 years. Don't add this. It is wrong, sir. Lease payment definition lo UGRV ledu, GRV undi. That 50,000 is not GRV, that is UGRV. You do this, gone sum. Means your conclusion will be correct only, but marks only you will lose. I am just doing it just to say that don't do. UGRV cannot be part of lease payments definition. Lease payments and yesterday we studied, no, in that UGRV ledu, GRV was there, not this fellow. Okay, tell me the final number you are doing. 7 lakh entama. Now go and check if this 762,435 is substantially equal to 8 lakhs or not. Very clearly, apparently visible. PV of lease payments represents how much percentage, ma? 95.2%. 762,435 by 8 lakhs into 100 of the fair value of the asset. Therefore, this is a finance lease. See how simple it is. Next, he asked you something called as unearned finance income. Unearned finance income ka formula is what? GIL minus nil. So first work out GIL, nil, take the difference. Khatam, over. So GIL is equal to, without discounting, directly add all the lease cash flows. That is almost a 593 into how many years? 3 years plus UGRV, sir, 50,000. ఎంత వచ్చింది బాబు ఇది? 969,779. Nil. Be smart, don't compute. Nil will be equal to fair value. No sir, I will again compute. We'll get the same answer. Using that number only, no sir, we worked out the lease rent. Madly other lease rent discount just 8 lakhs vastundi. So lease rent itself is worked out keeping 8 lakhs in mind, no? So if you again back work again, answer will be 8 lakhs only. Exact dot to dot vastundi, sir. Difference raakunda. Now he is asking you unearned finance income. Do you believe people spoiled this in the exam? Just because a question is not there, people did not prepare definitions. Whatever question, sir, concept ni bypass cheste, risk will be there always. Very bad. People were shouting paper was difficult only, I agree, but not because of this question. But people who say that paper is difficult, they include this one also in that. This is, how can this be difficult, sir? Okay. That's all he asked. He did not ask entries, but you will tell just 1 year entries. Tell. Because if you don't do entries, no sir, there is no other example. That's why. Entries in the books of, tell me who is lesser? Ferrari, yeah? First day, you will record, ఇది ఆప్షనల్ గా రాస్తాం సార్ సేఫ్ సైడ్ ఓకే లీజ్ రిసీవబుల్స్ అకౌంట్ డెబిట్ టు బ్యాంక్ అసెట్ lease receivable should be recognized at what value? Net investment in lease, which is equal to 8 lakhs. Just now only he bought the asset, so asset carrying amount also should be at 8 lakhs only. If he has not just bought the asset, if he is giving his existing asset, the question should have provided you the carrying amount of the asset. Or assume that ide carrying amount of the asset, but that fellow was following revaluation model for his PPE. Therefore, asset is appearing at fair value. I derecognized at fair value. Question ఇవ్వకపోతే ఏం చేస్తాం సార్ మనమే కవరింగ్ చేసుకోవాలి నెక్స్ట్ దిస్ ఇస్ వన్ డైరెక్ట్ కాస్ట్స్ ఆర్ నాట్ దేర్ సో ఆల్ యూ హ్యావ్ టు డూ ఈజ్ ఆన్ ద లీజ్ రిసీవబుల్స్ యూ హ్యావ్ టు రికగ్నైజ్ ఇంట్రెస్ట్ ఇన్కమ్ అండ్ ఆల్ ఏసీఎం నార్మల్ ఏసీఎం సార్ at end of year 1 tell me ACM country lease receivables account debit to interest income or finance income either way 8 lakhs you recognized into what was the discounting that you have 10% at 80,000 then bank account debit to lease receivables 306,593 like this the moment you receive all the lease receivables then the lease receivable balance towards the end of third year will be exactly equal to 50,000 by 50,000 UGRV I amount less ivodu sir I will less give you UGRV that fellow won't give you lease receivable exactly will be 50,000 asset will come back to you ఇప్పుడు ఏం చేస్తావంటే lease receivable you will cancel off again recreate the asset with a value of 50,000 this is what will happen towards the end now anyway suppose sir ఇదే question లో direct costs are there suppose they are there initial expenses you incur అప్పుడు ఏం చేస్తావు సార్ ఎక్స్ట్రా ఎంట్రీ రాయాలిగా what is that extra entry ఈ స్టేజ్ లో హియర్ ఫస్ట్ డే ఓన్లీ incur no so lease receivables account debit to bank suppose I incurred an amount of 10,000 rupees this is not there just for discussion I am saying so your lease receivable starting amount will be how much now 8,10,000 మీరు 8,10,000 మీద వెళ్ళి 10% కొడితే వర్కౌట్ కాదు why you spoiled your ACM method already so what you should do rework the interest rate again you remember compound financial instruments when you incur transaction cost also again you allocate it to equity also liability also when you allocate to liability the original discounting rate with which you worked out financial liability a discounting rate will not work anymore a EIR has to be updated like that e 8 lakh rupees NIL is computed using 10% rate so if future cash flows are discounted at the rate of 10% your starting amount will become 8 lakhs or if you compound 8 lakhs that will become 0 the moment all the cash flows are received but you spoiled this by adding 10,000 rupees to the first day number the moment you disturb that number IRR of 10% will not work for you you have to rework the IRR I hope I'm clear what I'm trying to say this is much below it should be below your range now by the time we are standing towards the end of the sessions because this is something which we already discussed in 109 also should be careful with that that's all sir this is lessor accounting in this one special case is there very very interesting case it's good that institute has kept that model and they are also asking questions on that this is called as finance lease only by a lessor who is a manufacturer or he is a dealer. It's a very, very interesting case, sir. Easy only, there is nothing much you have to do here, but a small observation to a question lo you can become pro. Okay. Sir, what is the difference between a normal lessor in a finance lease or a lessor who is a manufacturer dealer? How is it different? If he's a normal lessor, no sir, your accounting will be exactly like how we have discussed. And what he will do is, he will simply buy the asset in the market, other asset he will give it to you, eventually asset will be derecognized. If I tell you that this fellow is a manufacturer of the asset, you know what it means? He need not buy the asset, he has to make the asset. When he makes the asset, normally imagine, okay, numbers will take easy numbers. Suppose sir, cost of manufacturing is 100. My normal selling price is 120 or let's say 150. If anybody pays me money right now, I will give away the assets part low. How much profit am I expecting? 50. Now you came to me and you are asking me this on lease basis. That too, you are asking me on finance lease basis. That means you tell me, sir, how much should I collect from you? Not 150. 150 I will collect if you give me entire money today. But are you giving me entire money today? You are giving me over a period of time. So I should collect from you how much now? 150 also plus interest income also. Isn't it, sir? Put in difference earlier example ki this example. Earlier example also lessor was interested in earning interest income. Here also he is earning interest income. Then what is the extra difference here? Here there is a profit on sale. Earlier there was no profit on sale. Do you understand, sir? Earlier the asset what I gave to you, that is not a inventory for me. Today the asset what I am giving to you is basically bleeding my inventory, I am manufacturing it. So apart from recognizing interest income every year, you should also recognize some profit on sale also. Earlier case la profit on sale will not be there because sale of that asset was not revenue for you because you never made the asset. You bought it exclusively for the purpose of leasing it. This time you are making it and you are giving it. In this, two components will be there. Selling price also, finance income also. And selling profit, whatever is there, that must be recognized on the first day itself. Because it's just like a credit sale, sir. It's just like a credit sale. Only thing is the debtor, instead of paying me money at once today, he is paying that money over a period of 3 years. And the difference. Income, interest income, I will definitely book over a period of 3 years. Selling profit, today, first day after recognize. Because when I finance lease means what, sir? I don't have control on the product anymore. I have given it off. Risk and rewards are already transferred. When risk and rewards are transferred, should I not book revenue? Ind As 115 says when risk and rewards are transferred, happily recognize the revenue. So selling profit should be recognized now. Interest income should be recognized over a period of time. Now, so in this whatever you have, this 50 rupees is selling profit. Now when I lease it to this fellow, lease payments should recover 150 rupees selling price plus interest income also. So the lessor who is a manufacturer should recognize two things now, which was not there earlier. Should recognize number one, selling profit and interest income. Earlier case so that fellow was recognizing only interest income. This time extra selling profit good recognize also. And selling profit has to be recognized immediately. This is over a period of time. Anyway, over a period of time, ACM interest income will be booked over a period of time. Like that. Now the standard gives you some detailed guidance here. Some rules type it will be there, but if you carefully pay attention, you will understand the logics. Without understanding logic also you can do, but understanding is better. First one. recognize revenue సేల్స్ బుక్ చేయాలి సార్. ప్రాఫిట్ అంటే డైరెక్ట్గా ప్రాఫిట్ తీసుకెళ్ళి P&L అకౌంట్లో వేస్తే హౌ ఈజ్ ఇట్ కాల్డ్ యాజ్ రెవెన్యూ సార్? మీన్స్ వెన్ యూ ఆర్ మ్యానుఫ్యాక్చరింగ్ సంథింగ్, ఈ అసెట్ ఈస్ యువర్ ఇన్వెంటరీ ప్రైమా ఫేసి. ఆ ఇన్వెంటరీ సేల్, వెన్ ఎవర్ యూ సెల్ యువర్ గూడ్స్ ఇన్ యువర్ P&L అకౌంట్, you'll write only profit, you'll write sales also, you'll write cost also. Like that you have to show. డైరెక్ట్గా ప్రాఫిట్ రాస్తా అంటే ఒప్పుకోరు సార్. సో let me start again like this. This is my balance sheet. In my balance sheet, asset is there. This asset today I have given it to you on lease basis, but this is asset which I only manufactured. So it is like sale plus lease, not sale and lease back. Sale also is there, lease is also there. Combined accounting you have to do. Now, whatever standard guides you is rule number 1. Ante any points cumulative apply cheyali sir. First one says recognize revenue at lower of present value of lease payments or fair value, whichever is lower. The revenue should be recognized at this value. So tell me sir, what will the customer pay you in future? Lease payments he will pay, but he is paying me over a period of time, correct? And lease payments by default interest include interest income. If lease payments and interest income is there, how can I book sales inclusive of interest income today only? So interest income should not be there. Since interest income should not be there, what should I do? Instead of recognizing sales at full lease payment, I should recognize sale at present value of lease payment, so that a sale low interest income will be excluded. This is also in line with Ind As 115 story of significant financing component in your transaction price. It should not be there. You have to eliminate it. That's exactly why we are doing present value of lease payments. Sir, then why did you keep fair value as a checkpoint there, and whichever is lower, and why are you telling? It's simple sir. If you go deep, it is like this. 1, 2, 3. My lease payment amounts are already fixed. What people will do is sir, in order to artificially record more revenue in the first year, they will wantedly say, sir, nothing sir, we are charging only 3% interest rate. And 3% to discount chestadu sir. When you discount with lower rate, what will happen? Your PV of lease payments by default will be higher. Because this year I use a lower discounting rate, the present value number will be higher. If present value number is higher, sales also will be higher, no? Forget about this rule. I am telling you why this rule has come. The customer will pay me lease payments over a period of time. So today I should recognize sales at present value of such lease payments. This fellow will lie. The lessor fellow will say, no sir, we are charging only 3% rate. 3% to discount just. 3% when you discount, you will automatically have a higher number. But in reality, you did not charge 3%, you are charging some 10% or something. But just for the sake of booking more revenue today, you will do this kind of mischief. The standard says PV of LPs is okay, but the PV of LP cannot exceed the real value of the asset. That means the fair value of the asset. If I sell off this asset today, at 150 I can sell. What you are doing, you used some lower discounting rate in such a way that the present value is coming to 175. Indirectly, what you are trying to do is an amount which has to be recognized as interest income over a period of 3 years. Interest income will also some portion you want to book it as sales today only. The standard wants to curb you from that. So they are saying that PV of LPC is okay, but that cannot exceed the fair value of the asset. If you sell this asset right now for cash, our price in the price in the afterwards. So that's why whichever is lower. You will never come to see that in any of the questions. But just that you should know, so I'm telling you that. The first case. Second point tells you that recognize cost of goods sold at carrying amount of the asset minus present value of UGRV. Present value of UGRV to means you have to deduct that remaining net carrying amount ki cost of goods sold you have to book. Balance sheet la asset is appearing at this amount. Some amount I don't care which amount it is. Sir, why should I deduct PV of UGRV from this? The logic goes like this. Imagine a T-shaped P&L account, it will be easy for you. Imagine, sir, cost of goods sold lo entire carrying amount I wrote, which is 100. Full carrying amount without any adjustment. E asset nunchi what benefits I will get, you tell me? From an asset which is given on lease, what benefits will I get? Throughout the lease period, lessee will pay me lease payments. He will also ensure me guaranteed residual value. After that, the asset comes back to me. Again, I can sell it for some price. That means there is some portion of UGRV also. That means E asset is capable of giving me lease payments also. E asset is capable of giving me UGRV also. Correct, sir? Both. But the revenue what you recognized on the right side, this was representing not completely, it was representing only PV of LP. It was not representing PV of UGRV. Why was it not representing? It does not represent because the lessee is not going to pay you your UGRV. Lessee will pay only to the extent of PV of LP. So debtor you can debit only with PV of LP. Now what he cannot pay, why will you debit with that? So PV of LP I recorded. Now the problem comes, watch. How can you compare full carrying amount of the asset with PV of LP? They both are not comparable. Why they are not comparable is, a carrying amount of the asset is capable of giving you two benefits. One is PV of LP benefit and PV of UGRV benefit. But revenue law you booked only PV of LP. So complete carrying amount of the asset should not be booked as cost. So what you should do is, from the total carrying amount, whatever benefit is still going to come, that you remove it. What you are expecting as a benefit from the lessee, corresponding cost only should be booked in P&L account. So instead of writing of the entire asset ka carrying amount, in net amount we are holding it back. Otherwise they both are not comparable, you understand. Asset 100 rupees unte sir, ee 100 lo there are two kind of benefits I will get. One, I will get lease payments. One, when the asset comes back to me, some other value also I will get. Some other value when you are not writing today in P&L account, credit side, how can you write the full amount of asset cost on the debit side? They are not comparable. That's why that adjustment we are doing. Number 2. Number 3, number 4 are very easy. De-recognize the asset at carrying amount. What nonsense are already you de-recognize the second point, la cost of goods sold, is that only? No. Cost of goods sold is a separate account. With that, you pass with that amount. Separately, balance sheet, whatever asset is there, kill it separately. I'll help you with numbers later on. And recognize lease receivables as usual at NAL. What is lease receivable ka number? PV of LP plus PV of UGRV. Tell me, sir, out of these 4 points, 2 points are there which you already know. 2 points are there which you have to expressly remember in this case. Tell me, which points you already know? 3 and 4 you already know. Lease receivables must be recognized at nil. Asset must be removed at carrying amount. These 2 points already we have established. Finance lease accounting. Extra ga meer em remember cheyalante, sir, when you write this entry, no, lease receivable account debit to asset, normally what's the general rule, sir? Lease receivable should be recognized at what value? Net investment lease. Asset should be de-recognized at what value? Carrying amount. This is not an asset which you purchased. This is an asset which you created. So pakka gap will come. A gap is nothing but profit. కాకపోతే ఒకటే ప్రాబ్లం ఏంటంటే ఇది డైరెక్ట్లీ పిఆర్ఎల్కి యూ కెనాట్ టేక్. వై యూ కెనాట్ టేక్? అది ఇన్వెంటరీ. హౌ కెన్ యూ ప్రాఫిట్ ఆన్ సేల్ ఆఫ్ ఇన్వెంటరీ డైరెక్ట్లీ ఇన్ యువర్ P&L account? You cannot write like that, no. So what we will do is, instead of taking this PRL directly here, we change the presentation. We'll write like this: lease receivable account debit to asset. P&L place lo you will record some revenue, and here you will book some cost of goods sold. So what will happen is, instead of sending profit directly to P&L, you will send cost of goods sold to P&L. You will also send revenue to P&L. A difference whatever is there, that will directly come as a balancing figure in your P&L account when you prepare sales versus cost of goods sold. A balancing when net profit la profit vachestunది naturally. So idantha mathematical technique. Just have to understand casually. Very, very easy, sir. In these 4 points, 2 points you already know. E 2 points you have to. I told you the logic for both the points. Revenue should be recognized at present value of LPs because this is the present value of consideration. Imagine 115, significant financing component eliminated. But these fellows can manipulate, saying that standalone financing transaction interest rate is 3% only. That's why the standard says they put a check. It cannot exceed the fair value. So the first point is over. Instead of booking the entire carrying amount of the asset as a cost to your P&L account, you book the carrying amount of the asset minus present value of UGRV, because our UGRV ka benefit is not correspondingly recorded on the credit side of your P&L account. That's the reason. Chalo, we'll do a question on this so that you'll have more comfort after that. Please come to question number 38, sir. It already came in the exam also. 10 marks it came. Very, very important case. It came 2 years back, so maybe still considered important. Wait. A manufacturer lessor enters into a 10-year lease of an equipment with lessee. The equipment is not specialized in nature and is expected to have alternative use to lessor at the end of 10 years term. Stop there. Lease period 10 years. No alternative, sorry. It is expected to have alternative use and it is not specialized nature, sir. Out of your 5 criteria, 5th one fail, sir. But still 4 are there which you can, any one you can pass and become a finance lease. Let's see. Lessor receives annual lease payments of 15,000 rupees payable at the end of each year. The lessor expects that the residual value of the equipment to be 50,000 at the end of 10-year lease term. This is residual value. Lessee provides guarantee residual value that protects lessor from the first 30,000. From that UGRV you can understand. Total residual value 50. Lessee ka promise is to the extent of 30 and therefore UGRV is 20. Next one. The equipment has an estimated remaining life of 15 years and carrying amount of 1 lakh but fair value is 1,11,000. Stop there. 15 years life low, lease period is 10 years. Major A, but it is not conclusive enough. Major and point fail, sir. Because guaranteed residual value ka drama is there, option to buy will not be there. Correct? Automatically he becoming the owner will not be there. So you have only one weight. It is not a specialized nature asset, and he already told you. Out of your 5 criteria, 4 criteria you already tested, failed. Only one criteria is pending. What is that? PV of lease payments. Is it substantially equal to the fair value of the asset or not? You check. If it is yes, then it becomes a finance lease. Next one. The lessee does not transfer ownership of the underlying asset to the lessee at the end of lease term or contain an option to purchase the underlying asset. See, that will directly also told, but even if it does not tell also, options are not there, sir. Because if they are there, GRV ka drama will not be there. GRV is there means what, sir? Asset is going to come back to me. Then only GRV ka story will arise. The interest rate implicit in the lease is some ugly rate. How should lessor account for the same in the books of accounts? As usual, sir, just like how you did the previous sum, 5 criteria, 4 fail, sir. 1 criteria is pending. PV of lease payments you work out. Is it substantially matching with the fair value or not? You identify. It will match anyway, and therefore this becomes a finance lease. So he'll asking how will you account this? Normally you'll go and account. Trap edente e wording. Since he's a manufacturer lessor, direct lease receivable to asset rasa saripod, sir. Gap I will take to P&L account ante they not acceptable. Profit correct, but it cannot go to P&L account directly. It has to go indirectly by recognizing revenue separately, cost of goods sold separately. But before we start the drama, you have to prove that this is a finance lease. As finance lease aitene sale ainattu, operating lease aithe how can it be a sale? So appudu drama is not applicable. So let us see first whether it is a finance lease or an operating lease. Good question, sir. You need not solve, I'll solve. Watch or help me numbers. If you're writing parallelly, that's even fantastic. Tell me, sir, what is the present value of lease payments? 15,000 rupees into PVIFA 10.078% for how many years? 10 years plus. Did I provide a guaranteed residual value? Yes, 30,000 into PVIF 10.078% for 10th period. Do the annuity factor and PV factor. 15,000 into something plus 30,000 into something. 6.10 124. Okay, this one ma 0.3828. Multiply this. Do it. 15,000 6.124 and 30,000 into 0.3828. How much? 1 lakh. 3,000. 340. Something. Leave it. The PVFLP. What is the fair value of the asset? 1,11,000. If you check the percentage, 103,344 divided by 1,11,000 into 100. 93%. Very clearly this is substantial. Pakka this is a finance lease. So normal finance lease accounting you should not do. Manufacturer ka financing lease you have to do. In that rules are there. First are rules numbers work out jesi separate ga entry. That is the easiest way to handle this. First one, revenue at lower of what and what? PV of lease payments. Number we know. Luckily 103,344. How much did you get? This correct only, no? 103,344. B, fair value, which is 1,11,000. UGR we can include this. UGR 20,000 kadamma. Whichever is lower, this fellow got selected. Second one, cost of goods sold at carrying amount minus present value of UGR. What is the carrying amount of the asset? 1 lakh. UGR is 20,000. Present value same PV factors. I am using 0.3828. Do this fast. Final answer. 340. Very nice. 3. You derecognize the asset at 1 lakh, which is its carrying amount, and you will recognize the lease receivable at net nil and not zero, net investment in lease. Net investment in lease is equal to PV of LPs plus PV of UGRV. PV of LPs I know, which is 103,344. PV of UGRV multiplies are this one 76. Total JC 1,11,000 రావాలి వస్తుంది. ఎందుకు? నిల్ అంటే ఫేర్ వాల్యూ కాబట్టి. కంప్యూటింగ్ దట్ వాజ్ అ మిస్టేక్. చేసి ఉండకూడదు, డైరెక్ట్గా రాసి ఉండాలి. అప్రాక్సిమేషన్ ఎర్రర్ ఉంటుంది. 10 రూపీస్ అప్రాక్సిమేషన్ రావాలిగా. వచ్చిందా? రాలేదా? వెరీ గుడ్. ఎనీవే ఇప్పుడు ఏం చేస్తాం అంటే సార్, నార్మల్గా ఎంట్రీ రాశారు. లీజ్ రిసీవబుల్ అకౌంట్ డెబిట్ 1,11,000 to revenue, first point 103,344, correct up, to remove the asset from your books 1 lakh, ఏం జరిగిందంటే this will go to PRL, this sorry, not you, this also will go to P&L account. So in the P&L account, your sales side you will recognize 103,344. Cost of goods sold you will book 92,344. Gap how much more? The profit. I know this already on first day itself, profit 11,000. ఎందుకు నీ carrying amount 1 lakh, fair value of the asset is 1,11,000. ఆ 11,000 ఎట్లా వస్తుంది? If you don't apply this rule like how we have discussed, what you would have done is, and in the maximum mistake you can do is only this. Lease receivable, you don't have a choice, you have to recognize it nil only. Finance lease ka original rule. And you will recognize sales or not sales. Asset derecognition you will do at its carrying amount. But you will get a gap of 11,000. This, what did we discuss? You should go to PRL. కానీ ఇది ఈ కేసులో రాంగ్. ఎందుకంటే నువ్వు మ్యానుఫ్యాక్చర్ కాబట్టి నువ్వు డైరెక్ట్గా ప్రాఫిట్ ఆన్ సేల్ ఆఫ్ ఇన్వెంటరీ P&Lకి తీసుకెళ్ళకూడదు. సో దానికి ఒక ఆర్టిఫిషియల్ రెవెన్యూ, ఒక ఆర్టిఫిషియల్ కాస్ట్ ఆఫ్ గూడ్స్ క్రియేట్ చేసి అల్టిమేట్గా P&L అకౌంట్లో ఇదే 11,000 వస్తుంది. బట్ ఇది పర్సే రాంగ్. క్లియర్ సార్? ఇది ఇంపార్టెంట్ స్టఫ్. So guys, continuing after this manufacturer dealer finance lease case, in this one more point is there. Any initial direct costs are thrown off as expense in PRL immediately. Immediately expenses has to be thrown off into PRL. The reason being, this fellow is not only a lessor, he is also making a sale of goods with whatever expenses you incur. Since sale is booked off in the immediately, cost also should go off to P&L account immediately. All selling expenses should be booked off as expense in P&L account. Now at this stage, before we move further, asal initial direct cost ka treatment once we'll summarize so that you will have a overall view. Incurred by lessee, incurred by lessor. If it is incurred by lessee, you will capitalize it to ROU asset as discussed earlier. If it is incurred by lessor, you will ask him operating lease. If it is operating lease, the answer is what, sir? Defer and amortize. If it is a finance lease, then the next question we'll have to ask is, in case of manufacturer or dealer lessor, recognize as expense in PRL. Any other case, you will add to net investment in this. The entire lessee point of view, initial direct cost ka treatment. Lessee always capitalize. Lessor depends on which lease it is. Operating lease, defer and amortize. Finance lease, manufacturer dealer lo, apart from lease, there is a sale also. Since there is a sale, obviously you have to book it off in P&L account because the selling expenses. If it is any other finance lease, in that case, net investment in lease you have to add. In this case, you have to also remeasure IRIL. Original discounting rate you did, that is not working out because it disturbed the initial recognition amount. Up to here, sir. So we are done with lessor point of view, basic accounting. You're copying now? Copy. There is one more discussion, but fortunately or unfortunately, till now questions are not there on that. Means not even example is there. Modification of lease. Lease modification we already studied in the books of lessee. Lessor books we have to study. In these two scenarios, case 1. Lease originally classified as operating lease. So what you are accounting all these days is operating lease accounting you are doing, but today there is a modification. Answer is, sir, any modification is to be accounted prospectively. This is a point you have to remember. Now, for example, one, two, three, 4, 5, 6. Let us say this lease period is equal to 6 years. Remember, this is an operating lease. So lessor, what is he doing? He is booking lease rent as income in P&L account on a straight line basis. Till now, 2 years is over. Lessee comes to him and says that I want to revise the lease term. Instead of remaining 4 years, I want the asset only for 3 more years. So here, lease term revised to year 5 or 5 years instead of 6 years. Sir, what should I do? Nothing. If you are already standing here at the end of second year, what you have to do is 3, 4, 5, whatever lease rents are there, club it off, divided by 3, straight line number will come, recognize it as income over the period of 3, 4 and 5. 2 years accounting already over, no, 3, 4, 5, 6 is pending. Lessee comes to you and says that, sir, I want modification. 6th year I don't want the asset. Then I said modification is okay if you pay 2000 rupees lease rent every year extra. So work out the revised lease rents in 3, 4, 5. He combined lease rent, release it off to P&L account as income. Just prospective accounting. Revised lease rents during year 3, year 4 and year 5 recognized as income in PR. That's it, sir. This is one scenario. There is another scenario. Watch this. It's an interesting one. Ideally, they should frame a question on something like this, but unfortunately, they don't have that. But if it was there, it would have been nice. So this is a case where you started accounting it as an operating lease, but after few years you understood that this is not an operating lease, but this is a finance lease. Like how? Lease period is asset life is 8 years. Your lease period is 6 years, but you told that lessee you can cancel the lease any time after 3 years without any penalty. So enforceable period is only 3 years. Asset life is 8 years. Not major. Therefore operating lease. You started accounting it as operating lease. But second year lo lessee comes to you and tells that, sir, I will take the asset for full 6 years period. 8 years life lo 6 years period is substantial, major enough. Therefore, what was classified as operating lease till yesterday is now reclassified as a finance lease from today. So what you should do is, here on this date, lease reclassified as finance lease. If lease is reclassified as finance lease on this date, first 2 years of what did you do? First 2 years of what you did is e-lease rent, you transferred it to P&L account of respective years because you are calling it as operating lease. Second year endingly you are calling it as a finance lease. So hereafter you will account it as finance lease. So what you should do is on this date immediately de-recognize the asset. Normal finance lease accounting, a prospective, it is as good as finance lease entered now, and recognize lease receivables at what value? Net investment in lease. Whatever finance lease accounting we learnt, assume that finance lease accounting or finance lease transaction is entered today. Forget about last 2 years. It is a fresh lease which is at finance lease. Atla account this. Whatever happened has happened. Leave it. As long as these questions are not there till now. But standard law it is there. You never know what can happen in the exam. So safe side we are preparing. Easy, very, very easy. Janta, which case we are studying? Where lease is originally classified as operating lease. Subsequently it became a finance lease, an example. Another example is lease is operating lease. Now also it is lease operating lease only, but lease term lo changes and all are there. Case 2. Lease originally classified as finance lease. Now after classifying the lease as finance lease, now there is a modification. Already classified as finance lease ka meaning is what, sir? Lesser point of view, asset already removed from my books. My books what is appearing? Lease receivable is appearing. I am already doing ACM method for my lease receivables. Asset is not there in my books. E stage low modification happened. The standard again asks the same question which it has asked you in 115, which it has asked you in lessee's case also. What was that? Is there an increase in scope plus at market terms? Is it this kind of modification? If you say yes, then you know the answer also. So account the lease separately. Lease modification as a separate lease transaction. I have given one floor on lease. The lessee comes to me and tells me that, sir, he want another floor also on lease. Another floor also, you give it on lease, account it as if a separate asset is given to a separate customer. As simple as that. Very, very easy case. If you say no, that means no means either it is a decrease in scope or something like that, or it is increase only but not at market terms. Appudu no, sir. In no case lo what is to be done? No case lo how you have to think is, due to modification, lease is reclassified from finance lease to operating lease. You already are accounting it as which lease? Finance lease. Lessee comes and tells you that, sir, I originally thought that I will take for entire 8 years, but I don't want 8 years. Please cancel the lease after the next 2 years. If you see, original point of view finance lease, but for the actual lease term he is taking now, it is not representing major portion of the life of the asset. Therefore, it can be now classified only as a operating lease. In case of what you have to do is, all these days unnecessarily you removed the asset and created lease receivable. What you do now is de-recognize the lease receivables. So lease receivable is a kind of a loan given account. Cancel that. And correspondingly recognize asset at the same amount. Gain or loss will not come. Effectively the entry what you are writing is asset account debit to lease receivables. And questions are there, then all this you can apply and remember properly. Question are not there, but you should be careful. Question in the zip, sir. 5 minutes I can create a question. Example also they can create. You should be careful. If reclassification is not there, that means any other case. The reclassification is not happening, decrease in scope, increase but not at market terms, any other case. It's just similar to whatever you did in lessee's case. All you have to do is remeasure the lease receivables. To reflect the present value of revised future lease payments at revised discounting rate. Modification of the old discounting rate, let it go. Just like lessee case. Some of these questions are not there, but on a safe side we are covering this. With this concept, lessor ka story is also over, sir. Now there are two special topics in this. One is sublease contract and the other one is sale and leaseback. Sublease is very easy. Sale and leaseback also easy only. Just a little bit lengthy, that's all. First one, sublease. There is only one point you have to catch in this, but understand the story completely, then you will automatically catch that point. Sir, A Limited is the original owner. He is a lessor. This fellow gave the asset to B Limited on lease basis. So this fellow is the lessee. Wait a moment. I'll write this fellow's name here. This fellow is lessor here. What B Limited did is, B Limited in turn leased the asset to somebody else. C Limited. This is a sublease transaction. If first original transaction is there, no, this is called as head lease. Lease within lease is called as a sublease. Now who is B Limited? B Limited is original transaction lo lessee, but sublease transaction this fellow is a lessor. We call this fellow as intermediate lessor. Like how we used to call intermediate parent, no, like that this fellow is an intermediate lessor. He is a lessee in the head lease, but lessor in the sublease. Now forget about sublease now. So normally B Limited lo what accounting is happening? B Limited is a lessee, no, prima facie, so he would have capitalized ROU asset and he would have created a lease liability. Accounting he is doing already. Today this fellow leased the asset to somebody else. Now what you have to understand is what accounting B Limited should do in his books. Are the guidance given, because with lessor nothing will change in his books. Whatever is there, accounting will continue. With a new lessee, for him independently 116 will be applicable. He will also record ROU asset and all. The only fellow who is confused now is this fellow, because he is original transactional lessee, new transactional he is a lessor. The standard is giving guidance about how this intermediate lessor should account for the head lease. Lessee C Limited, they don't have a problem, but 116 separately applicable. He will again recognize ROU asset and lease liability based on his own lease payments and all. A Limited, whatever accounting he has done, he will do, continue to do. A Limited has got nothing to do with this sublease transaction. If at all any joker is there, that is B Limited only. Now how is he going to account this? Now sir, you have to first analyze whether the sublease is a finance lease or operating lease. Isn't it obvious? Because B Limited is a lessor now. Lessor accounting prima facie depends on whether the lease is a finance lease or operating lease. Now whether it is a finance lease or operating lease is assessed on the basis of ROU asset of intermediate lessor and not on the basis of original asset. This is a very, very crucial point. Easy only, but very crucial. Listen carefully. A Limited leased the asset to B Limited. Life of the asset is 10 years. Lease period is 8 years. Okay, let's say lease period is 7 years. For B Limited, who is the lessee in the original transaction, the operating lease or finance lease is irrelevant for him because that lessee anyway will record ROU asset account debit to lease liability. But today, B Limited became a lessor and he in turn gave the asset to C Limited on lease. Let us make it much more interesting. Let's make it 6 years then. This fellow has subleased it for a period of 5 years. Now, is sublease between B and C, is the operating lease or finance lease you have to identify. Standard says that is the operating lease or finance lease you identify not based on original asset, based on what B Limited has. Tell me, sir, B Limited has right on this asset for how many years? 6 years. 6 years low, 5 years right he has subleased it off. That means major portion of his lease term he has given it on lease again. Therefore, this becomes a finance lease. Adhe meer original to compare chesaru anukondi sir. 10 years life lo C Limited is using only for a period of 5 years. It sounds like a operating lease. You cannot compare that because 10 years right, first of all, B Limited himself does not have. When B Limited himself has a right of to use the asset only for a period of 6 years, whether it is operating lease or finance lease depends on 6 years how much period it is leased again to C Limited. If you say that it is a finance lease, I will make him de-recognize the ROI asset from his balance sheet. If you say that no sir, the operating lease, then ROI asset will continue with B Limited, lease rent will be recognized as income in his P&L account. Accounting same, accounting there is nothing new. Accounting anta same to same. Only thing is sublease is finance lease or operating lease, classification should be based on the terms of ROU asset, not on the basis of original asset. Keep that in mind. So when I myself have a right for 6 years, how can I give it for 10 years? I cannot give, no. When anyway you cannot give it for 10 years, what is the point of considering 10 years as a base to identify whether substantial period ki asset is given on sublease or not? There is no point. No, 6 years, so you have to compare. So, if you identified that sublease is a finance lease, you tell me what you have to do. You are B Limited, sir. Nee books lo already ROI asset is there, but you have now given this asset on sublease, which is a finance lease. Now that it is a finance lease, substantial risk and rewards relating to the asset are already transferred to sublessee C Limited. You cannot have ROI asset in your books. So you have to do two things. De-recognize ROI asset. Careful, sir, careful. You are de-recognizing only ROI asset, not the lease liability. You still have obligation to pay the lease payments to original lessor A Limited. Asset okate point. And recognize lease receivables. Any difference in this entry will go off to PRL. As simple as that. Asal original ga B Limited books lo ROI asset undi, lease liability undi. In that ROI asset you are killing off, lease liability is there. ROI asset place lo what is coming? Lease receivables is coming. Effectively, if you see this fellow's balance sheet, asset side lease receivables, liability side lease liability. Both will be there. He will receive lease rent here, he will pay it here. That's exactly what he is doing now. So balance sheet also will look like that. Guess this one. If sublease is an operating lease, de-recognize or don't de-recognize? Don't do not de-recognize your ROI asset. That's nice. Next, whatever income C Limited pays, that you recognize it as income in P&L account. Lease rents accounted as income in pure. That is that. What will sublessee do? He will do whatever is required as per Ind As 116, which means he will capitalize his own ROU asset based on his own lease liability. Original lessor, he will do whatever 116 asks him to do. ఈ మధ్యలో జోకర్కే treatment. Clear, sir? Easy only. On this, big numerical questions are not big. No numerical questions are there. There are only 3 questions. All 3 questions lo ఒకటే question. Is this sublease finance lease or operating lease? That you have to judge based on ROU asset, not based on original asset. If you remember that point, all the 3 questions you can handle off. I'm not going to that questions now. You can see that later on your own. But only this much, sir. You can handle everything. Then last one, sir, or almost last one, sale and leaseback transaction. So careful, this is not sale and repurchase. This is sale and lease back. So first of all, asset should be properly sold. Later on, other asset again you have to take it back on lease. So the fellow who is selling the asset, he is not just a seller, he is also the lessee. Therefore, he is termed in the standard as a seller lessee. I am seller also and I am taking the asset on lease back also. So I am a seller as well as lessee, seller lessee, and the fellow who is buying is a buyer lessor. Now guidance is given on how to account this in both the parties' books. Very easy, sir. It looks complicated, but it is not. First and foremost thing you have to ask is the control on the asset transferred to the other party? Control on the asset is transferred to the buyer or not? First case, let us say control on the asset not transferred to buyer. Control means what, sir? Decision making power and all the other fellow should have. Of course, you are taking the asset back on lease, that's a different thing. But all the risk and rewards, control on the asset, everything should be passed on to the buyer. Sir, whether control is transferred or not, sir, how will we know? Go and apply considerations of Ind As 115. In Ind As 115, step number 5, if you remember, recognition of revenue. Revenue recognition, when can you do? Only when control over the goods and services is passed on to the customer. Control can be passed in 2 ways, either over a period of time or at a point in time. Since I am talking about sale of an asset now, it should be at a point in time. So go and check whether control is transferred to the buyer or not. If you say case 1, sir, control A not transferred. Standard says, if control A not transferred, there is no sale. So when sale A not there, where is the question of lease back again? There is no sale and lease back. So the seller who is selling the asset will not de-recognize the asset. He will not recognize ROU asset also, because whatever stupid asset is there, asset ka full control is with me only. Why will I call myself as a lessee now? Legally you wrote lease contract. Who cares legally? In substance, control is not passed on to the buyer. So what will happen is, the seller does not de-recognize the asset. Any amount received, but technically, legally, sale is made. No, legally, substantial sale did not happen. Legally, sale happened. Since legally sale happened, the other fellow would have paid you money. Any amount received is accounted as loan received. You received loan, every month you go on paying lease rents, that is repayment of loan. Normal loan transaction when sale is not there. When asset sale is not there, you simply received money now. Futurely you are going to pay next 5 years ki money, repaying that money along with interest. Proper loan transaction. That is a financing transaction. So this is case 1. Asli case will not come in the exam because in this you don't have any proper accounting of sale and lease back. Case 2 is your exam fort. Control on the asset transferred to the buyer. Since asset ka control is transferred to the buyer, definitely there is a sale. And now that there is a lease also, lease back, there is a sale and lease back. There is a sale and lease back to be accounted for. Now, how are we going to account this? Sir, in this only okate principle undu sir. A principle correctly you have to catch. If you understand that, no matter how big the question is, very easily you can play. Follow the example, automatically you will understand. Sir, this fellow is A Limited. His balance sheet he is having one asset called as building. A building carrying amount is 100. Its fair value, that means if you sell off this asset in the market, anybody would pay you an amount of 130 rupees. So if you really sell in the market, forget about lease. If you really sell in the market, how much profit do you deserve? 30. Ideally that 30 should be recognized in my P&L account as income. Ind As 16. Gain or loss on derecognition of asset should go to PRL. But our drama is not just a sale. It is sale plus lease back. In a lease back, what happens? Building an asset will go off. One more asset will come. ROU asset. Physically speaking, I am sitting in this building right now. The building is sold off. Again, I leased off this building. Building will not move anywhere, no. Will I go out and come again? No. I will sit here only. One paper I will sign, sold. Another paper I will sign, I leased it back. Building will not move, I will not move, my camera will not move, projector will not move. Just legal transaction has happened. There is a sale and there is a lease back. But what problem is, sir? Profit can be recognized on the asset which is sold. Profit cannot be recognized on the asset which is retained, isn't it? When real sale is happening, then only a sale ka profit you can book. But when the asset is again coming back to you only indirectly, then how can you recognize profit on asset portion which is still retained with you? The standard says that profit apparently is 30 visible, but the asset will again come back to you. Since the asset is anyway going to come back to you, the profit which is related to that portion of the asset which you are not transferring to the other party but you are retaining with yourself because of a lease transaction, to that extent profit cannot be recognized. So if you observe now, fair value is 130, carrying amount is 100. So profit on sale will be how much? 30. What the standard simply asks is, in this 30, how much is profit related to retained portion? Asal retained portion ane concept why it comes is because you are leasing it back. Had you not leasing it back, royally recognize 30 in your P&L account, but I am leasing it back. So this some amount you have to identify. How to identify? That is the only trick here. Once you identify that, this cannot be recognized. If this is allowed to be recognized, you know what will people do? Everybody will do sale and lease back transaction. I have a building, sir. Building left 20 years. I'll sell it off today. I will lease the building back for 20 years. What will happen? Building will be completely enjoyed by me only. But today I ended up recognizing a profit on that. When building life is 20 years, entire 20 years the building is going to stay with me. All these years as a stupid building was there with me. How can you book profit on sale when entire asset you only are going to enjoy anyway? Where is sale there? Do you understand, sir? People will manipulate. People manipulated already. That's why provision came. Told you, no, accountants are criminals. Because you have duped so many people by falsifying financial statements, creating a intelligent way of working around all the accounting standards. A cases only they compiled, created standard to avoid that. There are still some provisions which can be beaten. So if you are much more criminal, you are responsible for one more accounting standard for your future generations. Anyway, profit related to retained portion, this you cannot recognize, but the profit which is related to transferred portion. This can be recognized. So a 30 rupees ka treatment lo entire key is there, sir. Chalo, let us see how to split this number. How to split it 30 into 2 portions. You understand that, game over. So what we will do is, we'll basically make a small table, sir, particulars, which is the fair value, or rather the sale price, carrying amount, profit. Total asset related fair value is 130. Carrying amount is 100. Profit is 30. E30 you cannot recognize. E30 is something you should not recognize. How much you should not recognize is asset retained. Why are we using the word asset retained? Because asset is again coming back in the form of a lease. Asset retained ka fair value I want. How will I know this? When you lease the asset back, what is the entry you are writing? ROE asset account debit to lease liability. The entry is passed with which amount? Present value of lease payments other than fair value. So PV of lease payments you work out. Let us say that is coming to 80. This is the fair value of asset which is coming back to you, because your asset normally would have been recognized at 80 only, no? Now, sir, what is the carrying amount related to this asset retained? Proportionately work out. What is there? 130 ki carrying amount is 100 aithe 80 fair value ki how much should be the carrying amount? Work out. 100 into 80 by 130. 104. Round it up, no problem. 104. Do you understand how am I getting this? 104. Hey, how did you get 104? You should get less than 61.62 I am making. Okay, 62. What this means is, the asset what you have retained 62, its fair value is coming as 80. So, 18 rupees profit is there, no? 18 rupees profit is a profit on asset which is still there with you. This only cannot be recognized. So how much can I recognize now? 12. 12 rupees you can recognize. You write entries in such a fashion that only 12 rupees profit will go to P&L account. Is that guidance, sir? In this there is nothing to get confused. People look at this and they'll get confused. There is nothing to get confused, sir. This is total asset ka fair value. This is total asset ka carrying amount. This is total profit. But the asset whatever is going out today, the asset again will come back today only into your books with the name of ROU asset. So whatever portion of asset is coming back, indirectly our portion is not sold, no. When whatever is not sold, with what face will you recognize profit on that? Don't recognize. So for that, how to do the split? Split is very simple, sir. The asset retained portion ka present value of, the asset retained ka fair value is nothing but present value of lease payments. Proportionately based on this, identify the carrying amount here, work out the profit on retained portion that cannot be recognized. Our remaining profit can be recognized. Now you see how entry we will write for this. I have written two entries now. One for sale of asset. Second one for lease back of the asset. Both combined entry. You see how beautifully this will come. Bank account debit. Tell me, sir, customer paid me how much? 130. This I cannot manipulate at the cash. What else I cannot manipulate is, I have to de-recognize the asset completely from my books. Asset ka carrying amount is 100. I have to write two more things now. What are the two more things? You have to recognize one ROU asset and you have to recognize one lease liability. Tell me, sir. Lease liability will be recognized at what value? Present value of lease payments. What is the PV of lease payments? 80. ROU asset whatever is there, normally that also should be booked at 80, should not write. Here alone you should be smart. 62 రాస్తాం సార్, not at 80. Why? ఆ 80లో our own profit of 18 is there. Till now in all the sums you took an asset from somebody on lease, but this asset is basically my own asset. My own asset lo my own profit is there. Our profit, how can it be called as your cost? Your own profit cannot become your cost. So here you should be a proportionate calculation, whatever you did know, this will become the carrying amount of your ROE asset. Now you see entry will not tally. 192 and this side 180. How much is the gap? 12 rupees. 12 rupees will go off to PR. Suppose you originally did your original talent. That means instead of 62, you recorded 80. ఏం జరుగుతున్నప్పుడు ఇక్కడ 30 వస్తుంది. ఆ 30 రావద్దని చెప్పేది. ఆ 30 is not allowed. సో 30 రాకూడదంటే ఏం చేయాలి సార్? వాట్ ఎవర్ ప్రాఫిట్ యూ ఎర్న్డ్ ఆన్ సేల్ ఆఫ్ యువర్ అసెట్ టు సంబడి విచ్ ఈస్ అగైన్ కమింగ్ బ్యాక్ టు యూ, ఆ ప్రాఫిట్ కెనాట్ బి పార్ట్ ఆఫ్ కాస్ట్ ఆఫ్ యువర్ అసెట్. అది 18 రూపీస్. సో 80లో ఆ 12 రూపీస్ మేనేజ్ చేసేస్తే 62 వస్తుంది. The entire key is there in this table. The table you understand, your entry automatically will come. No great rules. ఒకటే రూల్, lease liability is recognized at present value of lease payments. ROU asset is not recognized at present value of lease payments. It is recognized at present value of lease payments minus our share of profit on retained portion, or directly you can understand it as carrying amount of the retained portion. Sir, if I have two assets, one asset is sold, another asset I am only having, how can I book profit on second asset which I did not sell in my P&L account? At the best, if you want to revalue, show it under OCA. Without selling something, how can you book profit? You cannot book. No, like that only. Asset, legally I sold the entire asset, but 80% of the asset came back to me again. When 80% of the asset came back to you again, effectively you should de-recognize only 20% of the asset. No. So that's exactly what we are doing. If you indirectly, sir, watch this. 100 you de-recognized, but again you recognized an amount of 62. Effectively you removed how much? From your balance sheet, asset disappeared only to the extent of 38. A 38 ka fair value is how much? This table if you complete, you will get the full clarity. Look at this. 130 is the total fair value of the asset. 80 retained portion. 50 is the transferred portion. 62, 38 is transferred portion. So 100 carrying amount low, because of the lease back, effectively I transferred only 38 ka asset for a consideration of 50. You should ideally remove 38 only, book a profit of 50. Sorry, book a profit of 12. This is what you should do. But this we write like this so that whatever has to happen correctly will happen. It's wrong. It's wrong. I hope this is clear for you. In this, what these idiots will do is they will manipulate this lease agreement. What they will do is, what is the fair value of the asset? 130. That fellow will sell it for not 130, 150 sell chestadu sir. You will ask me, sir, buyer knows no fair value is only 130. Why is he paying that 20 rupees extra? What this A Limited will say is, sir, I am in need of money. I know the asset worth is only 130, but you please buy it from me today at 150. Pay me extra 20 lakhs consideration. Whatever you paid me extra, I will pay you back in the form of higher lease rents. Possible this kind of secret arrangement? First of all, I am selling the asset. Again, I am leasing the asset means what, sir? I need this asset, but I want your money also. So when this fellow is already desperate for money, this fellow will do all kind of deals. He will say that, I know asset worth is 130, but you please pay me 150. So the buyer will ask, why should I pay you 20 lakhs extra? Then I will tell him, 20 lakhs I will repay to you in the form of higher lease rates. Sir, in that case, what is to be done, sir? In that case, if selling price is 150, at 20 lakhs extra whatever you are receiving, no, separate it. That should be accounted as a normal loan transaction. It's as good as sale happened only for 130. At 20 rupees separately you received a loan. సో మై క్యాలిక్యులేషన్లో నథింగ్ విల్ చేంజ్. ఇదంతా యాస్టిస్ జరుగుతుంది సార్, ఏం చేంజ్ జరుగుతుంది. ఈ టేబుల్లో దట్స్ ద రీజన్ I did not write sale price first. What did I write on the second column top? Fair value. Let him actually sell for 150 also. I don't care. E table has to be done only with fair value. If your sale price is tainted, a tainted portion is either loan received or loan given. Adi separately we will answer. E particular calculation ki you have to take only the fair value. If fair value may be the selling price, may not be the selling price according to your contract. I don't care. Even if you collect 150 also, E table has to be done only with 130 as a sale price. 20 rupees you cheated, you took a loan transaction, loan separately account చేసుకోవాలి. Normal loan 109 will apply. That's also, there is nothing much in this. It's simple. Now when you apply, you will get more control. Let us see. Come to 42, sir. An entity, seller lessee, sells a building to another entity, buyer lessor, for a cash of 30 lakh rupees. Very well. Immediately before the transaction, the building is carried at a cost of 15 lakh rupees. Carrying amount is 15 lakhs. Sale price is 30 lakhs. At the same time, seller lessee enters into a contract with buyer lessor for the ROU, right to use the building, for 20 years with annual payments of 2 lakhs payable at the end of each year. Sir, if the question stops here, easily we can do the answer. All I need is one small discounting rate to work out PV of lease payments. But that fellow is putting one small drama. The terms and conditions of the transactions are such that the transfer of the building by seller lessee satisfies the requirements of determining when a PO is satisfied in accordance with Ind As 115. So satisfy, insert, control is transferred. The fair value of the building on the date of sale is 27 lakhs. Ikkad gone, sir. Now look at this. Your actual selling price is 30, but the fair value of the asset is only 27. How much extra did you take from the buyer? 3 lakhs. Extra whatever you took, that must be accounted as separate loan taken from the buyer. That is separate accounting. This particular transaction is 27 lakhs. Initial direct costs are to be ignored. Okay, fine. The interest rate implicit in the lease is 12%, which is readily determinable by the seller lessee. Buyer lessor classifies the lease of the building as an operating lease. The buyer ka classification doesn't matter for us. How should the transaction be accounted by seller lessee and buyer lessor? First, let's focus on seller lessee, sir. Buyer lessor very easy. There's nothing to do. Normal. He purchased an asset. He'll write asset to bank. He's giving it on lease. Since operating lease, all the lease rents will go to this P&L account. That is very simple. Lessor point of view. Lessee drama is there. Let's try to understand. This is the only question you have on sale and lease back, sir. So please mark important. It's a good question. So selling price is 30 lakhs. In this, fair value of the asset is only 27 lakhs. For your profit identification and all, you should consider only 27 lakh, because genuine sale price is only that much. Excess amount received, 3 lakh rupees, accounted as loan received, separate financing transaction. This is selling price story. Next, come to what is your lease payment as per contract. Every year, a month, every year. How much you have to pay? 2 lakhs. Sir, when the purchaser, buyer, he paid me 3 lakhs extra, my lease payment also, I extra recovery will be there, isn't it, sir? Did he pay you 27 lakhs or more? More. Since he paid more, he will also collect more from me, isn't it, sir? So whatever payment I am making, that is not purely for lease. That is for lease also, repayment of borrowing also. So, etlete ikkada split chesavu, like that here also you have to split. This includes payment for the lease plus it also includes payment for repayment of loan. You have to split this also. Tell me, sir, how should I split? One hint is apparently visible. What is that? 27 lakhs is to 3 lakhs ratio. That is wrong. Why that is wrong is, the total fair value of the asset, but this is lease payment for the asset which I have retained. So 27 lakhs is to 3 lakhs an idea is a wrong idea. Just because I split like that, don't apply 27 is to 3. This is full asset ka fair value, sir. Sir, full asset I am again taking it on lease. The operating lease, and he is telling me what is the meaning of operating lease. Suppose the building has a life of 30 years. I took it on lease only for a period of 10 years, let us say, or 15 years, let us say. So the fair value of entire 30 years building, the lease payment what you are making is only for 10 years of the building. So how can you take 27 is to 3? You can't take like that. You have to split. How to split, we will see. Next, what you will do is, present value of lease payments in the contract. So here, what is the lease period? 10 years or 5 years or 20 years or 20 years. Okay. Then contractual payments. Contractual payments means how much did you promise to pay? Since every year same amount, I can use PVIF. I think 12% is the discounting rate. And PV of cash outflows. The lease payments and contract is talking, but they are not. That is not true. 1 to 20. Contractual payment, how much am I making, sir? 2 lakhs. Work out annuity factor or C and tell them is 4694. Multiply it. 8801. Okay, nice. In the question, that did he give any PV factor in the question? No. If he did not give, we only should work out. That fellow took only 3 digits. That's okay, doesn't matter. One extra digit, so you will get a better answer than chatta answer, nothing worry. Now I have a small question. Correctly understand. If 14,94,000 whatever you wrote, are the PV of lease payments are PV of total cash outflow? Are PV of total cash outflow? That is not PV of lease payments, because in this complete 2 lakh rupees is not paid only for lease. It's paid for lease also. It leaves for repayment of loan also, isn't it, sir? Now see how I am splitting this. If 14,93,000 amount whatever is there in this, present value of loan repayment is also there. Yes or no? Yes. How much is that? All the installments on the 3 lakhs whatever you are paying, all that installments, if you discount with the interest rate itself, you will get the principal amount only. 3 lakhs you today you took. 3 lakhs amount also you will pay over a period of 20 years along with interest. All that installments along with interest, if you discount it to today, what will happen, sir? Again you will get the principal amount only. Imagine, sir, you took 100 rupees loan from somebody today. Okay. E 100 rupees loan, you are repaying it over a period of 1 year along with interest 110. If you take this 110 and discount it with 10%, what you are getting is present value. True, but that present value is nothing but the loan amount only, no? Like that, e particular sum low, sir, at 2 lakhs what you are paying, at 2 lakhs, 2 components are there, X, Y. 14,93,880 what is there? Present value of X is there plus present value of Y is there. A Y is my loan installment, which is included in lease payment. Present value of loan installments will be equal to loan itself. Adya 3 lakhs. So the remainder amount whatever is there, which is 11 lakh 94,000 approximately. This is your present value of actual lease payments. This is the present value of real lease payments. What immediately will not sink is a 3 lakhs. How did you separate? I'm telling you, no sir, this 3 lakhs definitely is there in my amount received today. This 3 lakhs ka repayment is there in the 2 lakhs. 2 lakhs is not one time cash flow. 2 lakhs I will pay for 20 years. Every year 2 lakhs low. This 3 lakhs extra received ka amount ka repayment is there. Like that 20 years it is there. All that installments, if you discount it to today, interest gets evaporated. Only the principal amount will be left in that 11,94,000. 3 lakhs I separate it off. So the utility now is whatever 2 lakh rupees you pay, total payment each year, whatever 2 lakhs you have, 2 lakh rupees should be split in the ratio of 11,94,000 is to 3 lakhs. So split and tell me, sir. 2 lakhs by 1494 into 1194. 839. This is each year lease payment. Balancing figures are remaining 40,161. This is each year loan repayment. Like that you have to split. You don't like this, I have another method that also will give you same answer. Another method is, you know the amount of loan. How much is the amount of loan? 3 lakh rupees. It is repaid over a period of 20 years. Interest rate is 12%. Work out annual installment. A installment is 2 lakhs minus JC. Automatically 159,830. You know how to work out equated annual installment? Total loan divided by annuity factor. Take your calculator, sir. Do it. 3 lakhs divided by 7.4694. అట్లా వస్తుంది రావాలి. అది ఇన్స్టాల్మెంట్ సార్. ఆ లోన్ ఇన్స్టాల్మెంట్ సపరేట్ చేస్తే ఆటోమేటిక్గా లీజ్ ఇన్స్టాల్మెంట్ వచ్చేస్తుంది. ఇదంతా చేసే పని లేదు. ఐసీఓ ఇట్లా చేసేటట్టు చేసాం, బట్ దట్ ఈజ్ ఈజీ స్మార్ట్ వే. లోన్ ఇన్స్టాల్మెంట్ సపరేట్ వర్కౌట్ చేసి అది 2 lakhs సపరేట్ చేసేసేయండి సార్. ఆటోమేటిక్లీ మీకు లీజ్ ఇన్స్టాల్మెంట్ ఎంత తెలుస్తుంది. దట్ వే ఆల్సో కెన్ వర్క్. యూ డోంట్ లైక్ దిస్, డూ దట్. ఎనీ విచ్ వే లీవ్ ఇట్. ఇప్పుడు మ్యాటర్కి వద్దాం సార్. Particulars. Fair value. Very good, fair value. Then carrying amount and then profit. All you will write is only one entry. One entry ke this much drama. Total asset. Fair value is 27 lakhs. Carrying amount 15 lakhs. 15 lakhs. But normal guy had a transferred full asset without any lease back, I would have entitled to recognize a profit of 12 lakhs. Because I am taking my own asset back again, some profit you cannot recognize. Assets retained portion. PV of lease payments. You need not work out, already worked out. PV of lease payment is how much? 11,94,000. The carrying amount is proportionate to work out, sir. 27 lakhs if it has a, or its place is not there, I'm adjusting like this, okay. 27 lakhs has 15 lakh carrying amount. 11.94 lakhs will have how much carrying amount? You tell me the full number. 6 lakhs is correct. Take the difference also. 532 667. Okay, this much profit you cannot recognize because this much asset is again with us only. So if you net off this, remaining profit ఎంత వచ్చిందమ్మా? 12 lakhs minus 530. This is relating to assets transferred portion. So you can work out net of these two also. 27 minus 1194 is how much? 40 now. 15 lakh 6,000. And this one is how much more? 36,667. This much profit can be recognized to PRL. Like that. Now you will tell me the entry. Accounting in the books of seller hyphen lessee. You received 30 lakhs, don't account like that. Separately account, life is easy. First, loan rasadam sir, easy out. Bank account debit to loan. How much amount? 3 lakhs. This is out, separately handle చేసుకోవచ్చు. P. ఈ 27 lakhs ka drama you start. How much money did you receive for sale of asset? 27 lakhs. You have to recognize some ROI asset. 2. You have to derecognize the asset from your books. Asset has to be derecognized only at carrying amount. I am a lessee now, so I have to recognize a lease liability. Lease liability I have to recognize at 11,94,000. Normally asset also I should recognize it 1194 only, but that is an asset which I sold now. Again this is coming back into my books. When you sold at fair value, in that profit is there. PV of lease payment also is fair value only, in that also profit will be there. I cannot recognize profit on sale to myself. So instead of recognizing with profit 1194, you will recognize at 663,333. Now the entry will not tally, it will throw up a gap of 669,333. This will go up to PR. Here instead of writing 663,333, if you go and write 1194,000, then you end up recognizing full 12 lakh rupees profit there. Ajay good. That's all. Hereafter what will happen? What should I tell you, sir? You all know. ROI asset will be depreciated. Lease liability to the ACM you should apply. Bank money to you enjoy. Asset is already derecognized. Katham over. If you do not like this split version what we did, you can alternatively do this one. Work out loan installment separately. Loan installment formula is what? Equated annual loan installment. Take the borrowing amount divided by PVIFA. Percentage for number of installments. So in this case borrowing amount is 3 lakhs. Annuity factor we already have no direct line rating 7.6494. You will get something around 40,164. This lease pay, this loan payment kabatti total 2 lakhs. So if you separate this, remaining is what you are exactly paying for the lease. Like that also you can do. I said I also did like that, but this is easy. You are pro in AFM, no? So you should be able to do this. But time value of money, this is what you should learn. 159, 830, and 9 is a match, 6 rata. Anyway, sir, nothing will happen. Fine, sir. This is the accounting what you do in the books of seller lessee. A buyer lessor antara much more easy. Sir, what did buyer lessor do? Today he bought the asset. Since he bought the asset, write the entry for purchase of asset. What's the entry for purchase of asset? Asset account debit to bank. That's all. 27 lakhs. 27 lakhs. Not only that, he gave extra 3 lakh rupees also. So loan receivable account debit to bank 3 lakh rupees, 3 lakh rupees. Not only this, asset whatever he bought, that he again leased it. He's saying that the lease is an operating lease. Since that lease is an operating lease, asset we should not derecognize. Flow lease receivables to asset and enter I got, sir. That we will write only when it is a finance lease. This is an operating lease. That's it, over. Here onwards, that fellow will be nicely paying you lease rents. A lease rents need 2 parts cheskon, sir. One related to loan, the other one is related to lease rent. Lease rent portion will go to P&L account, loan ki ACM application will happen. Same other amount of 40,000, whatever you got. Most cheapest accounting, sir. At certain you will provide depreciation happily, but whatever remaining life is. So guys, this is what is there for your lessor point of view. There are 2 questions, sir. Quickly 2 or 3 questions which you have to go through it. Not very difficult or complicated, just like that. Quickly we'll finish it off and we are done with it. So why did this come? Yeah.